Yo, 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 what's up, everybody? Please tell me if we got audio. Just tell me if the audio is working. I know last time there was some errors. Let's see. Do we got audio? Come on. Yo, are we live? Okay, let's go. Yo. Okay, we're good. Here we go. I couldn't wait. I couldn't wait. I couldn't wait, guys. All right, we're good to go. What is up, everybody? We are officially live streaming the Q2 earnings report. And yes, I did an all-nighter, no sleep. I go to sleep at like 12, 1 o'clock every night. I was like, man, we're just gonna pull an all-nighter tonight. So no sleep. If anybody has any questions, the earnings report is gonna drop in 1 hour at 7, and the earnings call is gonna be at 8. So we got an hour to just chill and get hyped. We'll go into the pre-market real quick. Let me see. Present. Let me go to this one. There we go. Check that out. There we go. Heck yeah. All right, guys. So on Webull, I'm following about 120 stocks. Obviously, there's that. Oh, wait, never mind. I'm following 150 stocks, and you can see some of them don't even have like pre-market, like they don't get any trading or anything. So out of 111, SoFi is 110 out of the 111 live for red. We're down 2% right next to CrowdStrike. So this is just, I think it's just that last second shakeout. Last second shakeout. And this is expected. Just fear, fear, fear nonstop. All right. We got 82 people live at 5:59. You guys are early birds. Holy crap. At my regular job, I have my own business. I don't start work until 9, 8, 9. So this is like, I don't ever see the early days like this. Been waiting on this for a while. 22,000. Let's get to 8. Christmas. I've been up all night too. I'm working nights this week. Ooh, I used to work nights. Waiting on SoFi. Hi from Singapore. Here in Slovakia. It's a 12. No problem. Okay, how do you buy your stocks? What do you buy your stocks on in Slovakia? I'm curious to know that. What's the platform? What's it called? Hi from Germany. Hi from UK. Guys, see, I gotta go live more because I make the videos, I see your comments. It's crazy where you guys are at right now. Hi from Taiwan. Stop messing with me. You guys are pranking me. You guys are pranking me. You guys are lying. Stop lying. What the heck? Hello from Bulgaria living. Dude, come on. This is wild right now. It used to not be like this. Hi from Austria. Hi from okay, you guys are trolling. I'm done. I'm done. I'm done. You guys are messing with me. All right. Let's see. Let's see what's going on. Look, guys, Some people talk crap about me when I pull up the Robinhood charts. Guys, Robinhood Robinhood is made for this stuff. Like Robinhood is meant to buy and sell and trade and options. That's what it's made for. It has SoFi beat. It's okay. SoFi management already came out and said they don't want people actively trading and losing money and crypto trading. They want people to do the ETFs, the long-term investing. So they don't have this crazy quick platform, okay? Pretty much what separates Robinhood and SoFi is just the UI, the charts. It has like every little second you move it to the penny. SoFi kind of moves in like little minute ranges. So yes, I like to use the SoFi platform or the Robinhood platform, to show you guys the stock quickly, and that's all good. Okay, SoFi is not, they've already said it, long term investing. So anyone who's talking crap about SoFi or that I use the Robinhood platform to do my screenshots on Twitter. This is Robinhood's bread and butter. This is what they do. So I just want to throw that out there. So all right, let's just watch the Wheat Bowl for now. All right, all right, all right. Let's see. Okay. Hi from Korea. Hi from Kuwait. I sold my 1969 Camaro to buy SoFi shares. So this better moon. Damn. How much? What do those go for? Like 69? It's gotta be worth a lot of money. Hi from Hong Kong. Come on, Dev Pun, what do you use to buy your stocks? I want to hear. What's it called? That stuff just interests me. England. How are you buying your SoFi shares? Because I know none of you guys have SoFi. I buy my SoFi shares on SoFi. I don't buy my SoFi shares on Robinhood. You guys see that when I pull up the Robinhood chart? There's nothing in there. Everything's in SoFi. Start building a map, Kyle. Hi from space. Hi from Dubai. I want to go to Dubai one day. I know that place is nice. What's the deficit in Dubai? They must not be stupid like freaking what we do in America. All Europe is up, of course. Hi from NYC. Hi, Florida. Sitting in traffic, headed into DC. What do you got? A government job? You growing, bro. Appreciate it. Chucktown, South Carolina. Hi from, I don't know how to say that one. I'm sorry. Zechia? I don't know that one. What time is earnings? The earnings will come out at 7. So 56 minutes. 56 minutes you get earnings. Okay? Talk about update rumors. Guys, nobody knows what the updates are. I mean, they did a big update from 2.0 to 3.0. It's been going 2.0, 2.1, half. It's never made the one point jump. Tevis said this could be a big update. We don't know. What could it be? Could it be a brand new UI update? I mean, that would be the big one, of course, but who knows? I mean, we really don't know. Assalamu alaikum. How are you? From the UK. Catfish Tyler, mention your name. Tell him I appreciate it. 3.0. I don't compare anymore. SoFi is a one in a lifetime opportunity for me. So I'm buying as much as I can options in stock. India. Frankfurt, Germany. How long till we get results? 56 minutes or 55 minutes. Interactive brokers. I'm from Taiwan, Madagascar, New Zealand, Portugal. I feel boring for being from California. UK, SEC. Oh my God, bro. This is wild. Yo, if you guys really want to do me a favor so we can get this stream booming by when the earnings come out, take the link and just post it on Twitter and StockTwits. That's it. StockTwits, Twitter, chat forums, just blast this stream. We're going to get the earnings right away. You'll see my live reaction. Can't lie. If the earnings suck, I'm gonna be a little bit sad. That's part of the game. If the earnings are really good, it's gonna be crazy. But we're gonna literally see them live this time. They usually come out 2, 3 minutes later. We're gonna be able to see the earnings live. So if it's bad, you're gonna feel the pain instantly. And guys, the thing about the SoFi stock, people always ask me, why are you buying SoFi? Why are you following this cult like following? They were unprofitable. Guys, when you're investing in stocks, I mean, what are you really investing in? You're investing in, obviously you want your stock to grow in value, but how does it grow in value? It grows in value by taking market share in its sector faster than other companies. Isn't that the stock market? That's the stock market in a nutshell. You're trying to find the company taking the most market share, growing the fastest. So when I see SoFi, I saw the 60, 50, and 30% growth the last 3 years. And at the same time, they flipped to profitability. And it's supposed to be like a super bad year, highest interest rates in 15 years, and they might put up 20%. So if we flip lower interest rates the next 2, 3 years, I think SoFi can pull off another 3 years of 25 to 35% growth. And think about it, this company grows 30% for the next 3 years. This thing's gonna be a monster. What are we talking? $6, $8 billion revenue, 20% profit margin. You're talking $2 billion in profits. I mean, it's so early still with this company. It's crazy. But that's why you invest in certain stocks. You're investing in what company is going to grow the fastest. And hey, we look at all these other fintechs, all of them flip to unprofitable or barely hanging on profitable, while SoFi freaking is growing profits and stealing market share. I mean, come on, guys. That's what we're investing in. The fastest company in the sector to steal the most market share. SoFi's been doing that. Look at the users, look at the deposits. Everything's coming SoFi's way. They're getting everything. Okay. This is a broken stock. It is a broken stock, guys. There's nothing else we can say about it. It is broken. 11 earnings beats. I've been covering the earnings for 3 years. I mean, that's a long time. 3 years, almost 12 straight quarters, since they went public. 11 earnings. Beat, 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 beat. They missed like one out of 11 in the beginning. That's part of the game. The macro sucked. Okay. They went with AI. They went with AI the past 2 years and semis. That's it. Okay. We got screwed. It's part of the game. So maybe it's going to flip with lower interest rates and lenders start picking back up and SoFi gains more market share and they diversify into their, technology platform, Galileo, get the SaaS multiple because other fintechs start taking off because rates are lower and then it becomes a hybrid valuation. And, maybe once they turn a billion and a half dollar profit, instead of getting a PE multiple of 10, like a legacy bank, you get a PE multiple of 30, 35, and you're trading at $30 to $45. That's it. Okay. You get a super PE multiple if you have superior growth and you grow your EPS superior to the other legacy companies. That's it. Okay. Here, all these guys make videos that are bearish. Hey, they're a bank. 10, PE 10, PE 10, PE 10. It's like, dude, look what they're doing. They're sacrificing profits right now to steal up, going for 1 million people per quarter, 4 million. That's easy, or that's not easy in America. That might be easy in, Brazil, freaking getting 1 million people a week. That's not easy to pull 1 million people with the competition in America every 90 days. That's not okay. So that's what they're trying to do. And now they have both. They have the scale of growing users and they have the profitability. And it's just matching each other at the same time. That's all it is. So yes, broken stock, not a broken company. I'm looking at a 30, 40p multiple next 3 years. I think it's gonna be a 40 plus dollar stock. Okay, right now I think it's undervalued. I think it should be trading at 14. Go look at the analysts on my Twitter. There's 3 analysts. Dude's got a 12, and a 14. Those are professional Wall Street analysts. Why are they throwing out those price targets? It's just the average price target looks so ass on SoFi because you got 4 guys at 5, 6, and 6 and 4. That's why you just got these mixed opinions. So that's all it is, guys. That's all it is. Trading 212, I've heard of that one. Internet, okay. Interactive brokers. That's okay. It looks like a lot of people are using that. One of my favorite cars. No, 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 no. So the call starts. I mean, I really don't. I'm going off of my time, Eastern, Florida, South. The the earnings are at 7. The call's at 8. Hi from Hong Kong. I use Webull. Oh, okay. I'm using Webull too. Okay, so it's in Hong Kong. I didn't see. I didn't even freaking know that. Forgot. Internet. Okay, so we know what people are using now. People are using Webull and interactive brokers to buy their shares in Germany, Europe, Hong Kong. So wild, wild, guys. Cali, 4 a.m., Montreal, Canada. Greetings from Emmett Tesla. Emmett Tesla. What is that? Godspeed to you in Israel. Well finished from New York and New Jersey. I don't know what the Emmett Tesla is. Hi from Vermont. I was buying it on eToro when it was a SPAC. Okay, okay. Macedonia. Can we hit 9 today? Hello from Ottawa, Canada. I've been to Canada before. I went to snowboard in Uxbridge. Is it anybody from Canada ever heard of Uxbridge? Holy crap, it was cold. But man, there's some big hills like out there. I mean, it was like negative 30. So I wouldn't mind hanging out in Canada like when it's, I don't know, 20 to 40 degrees. I can't do the negative 20. I can't. So that scared me. What do I expect for earnings? I'm looking for $585 million, guys. Hear me? If you see 585, that's a thumbs up, okay? That's solid for what people are expecting for Q2. If you see 585, be happy. If you see something lower, it just depends. I mean, if it's like 571, I mean, they had some problems in Q2. That would definitely be some problems. But like anything over 585 is money, man. Money. Expectations are low, okay? So 585, I think we're in the clear for the overall earnings. And then profit 20 to 30 million. We're not looking for a crazy profit. So just keep your expectations low for Q2. That's the problem. That I'm happy Anthony Noto did this because people are always like, SoFi coming out 60 million quarter over quarter. That's what they were doing last year. They did a quarter over quarter jump in Q4, like 65. Guys, do you understand what a quarter over quarter jump is? That's faster than 95% of software as a service companies in America. None of them are jumping $65 million. And they're all trading at 20, 30 times sales. Nobody's growing 65 million quarter over quarter. I think if SoFi wants to do that in Q3 and Q4, they can do it. 65, they can jump $60 million Q3, Q4 if they want. So, yes, expectations 585 revenue, 20 to 30 million net income. Looking for 30 be cool. So that's pretty it. That's all you got to look for, guys. You see 585, be happy. Be really happy. Once you look at that, just go straight to guidance. Just get straight to guidance and see. They might do just the Q3 guidance, or they might combine it second half. I think they might just combine it second half because that's what they did last time. So it might take you a second to process the numbers, but you'll know if they increase the growth. So um Ireland, holy crap. I didn't know like anywhere could like buy SoFi. I don't know. I guess SoFi you can buy it what any country in the world? Jesus. What's up? So SoFi pops today. I'm holding 5,000 shares, 10 leap calls, January 2016. I don't know. Huh. How many shares do I have? I have a lot of shares. I don't really disclose that, but I like to tell people it's over 1,000 to keep you guessing. So over 1,000 shares. Negative 3% now. Let me take a look real quick at Webull. Come on, negative 2.4. Come on, CrowdStrike is freaking. They freaking have an investigation going on, and we're freaking hanging around CrowdStrike. I mean, getting investigated by lawyers for freaking error. Like, Why are we down here? I got 115 growth stocks on my list. Why are we down here? They're just playing games. This is just games. Nonstop games. There's like, I mean, this is good though, because last earnings we were green like 5-6%. So think about that. The last earnings we were about 6% green. Something to think about. And also the day before we were like 4% green. And today I think we went red too. So that's two different things we had from last earnings. Red on the day of and the market now. And last time we were green both. So this could be good. We don't know. 1,200 shares, solid. We've been feeling the pain. Yeah, like I said, broken stock. It is a broken stock. Any earnings news or new? No, nothing. 7 o'clock. We got, what's that, 43 minutes? It's all about the guidance. There you go. We all expect them to hit that number, that 560 to 565, I think. That's what the guidance is. What's your honest guess on EPS? Well, 30 million will be 2 cents. That's how it kind of equals out the outstanding share count. 2 cents is $30 million. So yeah, I'm thinking 2 cents. I'm cool with that. Earnings call starts at 8. Earnings come out at 7. Yep, dropping pre-market. What's the number do we need to beat? The number is like 565 or 567. 565. Is someone going to take some profits or staying in long with every single share? I don't really care. I mean, if you're some people, if you're going to be taking profits, um, I just think it matters of like how big your position is. Okay, if you got like a monster position, I mean, maybe you could trim a little, but I think it just depends on your share count. Is when you need to take profits on short term moves, because just look at what Robinhood and Palantir did. I mean, do you really want to miss out on that? Like, do you want to take profits from $7 to $8 when they were both at about 7, and then one went to 28 and one went to 25? What if you lost half your shares because you decided to take a 10% profit? Like everyone says, no one got hurt taking a profit. You get hurt if the stock goes to 28 from 7 and 25. You're losing out on 200 and 300% gain. So that's where the short-term investing mindset and the long-term investing mindset, differs. Sure, maybe you get some wins here, 10% here, 10% here, but the guy that, makes it to $30, he's getting 300, 200%, no problem, like from here. So that's the difference when you got to decide if you want to trade or if you want to hold. I don't even like, I'm at the age now, I don't even care about day trading and stuff like that. Like, stock gets flush for 2 years, it doesn't bother me because I'm following the company's fundamentals. I know what's going to happen one day when the macro turns. And I'm telling you guys, I was just looking at a bunch of hedge funds, the top hedge funds in the world, that were loading $1 billion, $2 billion in Nvidia like 5-6 years ago, and they all got like 15 and 20 X's on their Nvidia positions because they were buying with the stock split. They were buying like $4, $5, $6, and look at it now, it's like 90 or $100 or something like that. See what I'm saying? They 20x. They probably felt some pain, but those were institutions that just kept following the company. And you 20x $1 billion, it's a nice boat, pretty nice boat. So you guys do you. These up and downs, 10%, 15% down, up. I don't even care no more. Let's see. Trading on 212. I keep hearing about that 212. I've heard about that one for a little bit. That 212. Did the SPAC listing cause an overhang on the stock? Yeah, all of them did. They just, the SPACs. They had to go public. They needed capital, and their debt got bloated. Uh, bad deals, like when like Sofi did the refinance on the debt offering, stuff like that. Just, yeah, the SPACs were sloppy. But Anthony Noto, I guess that's how the way they had to do it. It wasn't as good as going the IPO. Right? They had to go SPAC for raising the capital to get the bank charter license. So It was a lose for reputation going SPAC, but it was a win getting a bank charter because nobody was really getting bank charters last 2-3 years. Why pre-market so low? That's called algorithm pre-market trading because it's not like anyone's taking profits right from the last 2 days. I mean, the stock's been in the same range. It's been red. There's no profit traders. It's just algorithms dumping right now. So, or people are selling for losses because they're getting shaken out. Yeah, I get it. It's freaking, what is it down now? 3%. Oh my god. The earnings haven't even dropped yet. This might be good, guys. It might be good. I don't know. It might be good that we're red right now because we were green last time. Last quarter we were freaking green, and we finished the day down 7 or 8%. So remember though, and don't forget about those cap calls. Where those institutions bought cap calls over $12. Maybe this is their Noto and them green light, and they just freaking take it off. Boom, go straight to 12. You never know. Remember those cap calls on that debt restructuring deal? There's some big whales behind this stock, that are going to get big rewards for going over $12. So something to think about. Looks like he's going to sell out again. I don't know who you're talking about. It's not me. Get Chapman out. He has a lot of enemies. When are earnings released? Earnings are released at 8 o'clock East, South Florida. I mean, that's where I'm at. 8 o'clock. Barkley's just shorting us, and Noto knows all about it. There you go. There you go. Part of the deal. Short the hell out of us. You know what's coming. Great earnings. Let's take this bad boy to 12, and then Noto might be like, send me to the promised land. 45. I'm gonna give you this much profitability this year. That's how it goes. Anthony Noto, when he left Twitter, guys, when Anthony Noto left Twitter, he had the stock turning around like on a 60% run from where it was stuck at. And he was about to take Twitter off. He was there for a while, but he was about to take Twitter off. Like they were about to launch, and because he was doing some new, you know, techniques, live streaming, producing more revenue content, and he was figuring it out. And boom, left and came to SoFi. So he was about to get Twitter right. Just takes time, you got to get that game plan in place, and I think he's got that. I think he's got that game plan, man. There's a question I want to ask you guys. It's very confusing. It has to do with that last uh, thing he did on CNBC, where you have to listen to the exact word. I don't know what he said, but he said either we're setting up for a strong back half of 2024 5 or something. It sounded like he said back half of 2025, or I can't remember if he said second half 2024. It's weird. You got to listen to it. Someone said he said second half 2024 and 2025. I don't know. I thought it was just 2025 he was talking about, but someone said he was like talking about second half 2024. It's like one little word difference, and or if or something on that call. I read it on someone said that something about 2024. I was like, what the hell? He's talking about 2024 back half. It has to do with that video. It's confusing. SoFi is a spring being depressed at some point in the future. Spring will get released and pop 25. I think the same thing because I just think the earnings are better than a lot of the other fintech and other technology lender, all of them. I think SoFi is just cruising, stealing market share. If you take a worst case P of just a bank, what do you think the fair price would be? Well, we don't really have profits, so it would be like barely anything. Like you have to take like 160 million times 10. Yeah, it'd be like $2 or something like that. Like $2 if you had the exact PE ratio, but it doesn't because it's trading at a premium right now. But that's because the profits have literally just began. But yeah, we're getting a premium right now, but it shrinks as the profits grow. Greeting from Sweden. Using Tiger Brokers in Singapore. What the hell? Tiger Brokers? Hong Kong here. My God. I guess a lot of people are. Can you tell me? Because I know SoFi has a brand or platform, trading platform or something like that in Hong Kong, but I don't even know how much revenue that brings in. Like, are you guys like people buying stocks on SoFi in Hong Kong? Because I thought that's what they were trying to do, and I didn't hear anybody from Hong Kong say they're using SoFi. Okay, stock is getting wrecked in pre-market. I wouldn't say it's getting wrecked. It's just like it's just some bullshit algorithm right now. 2 or 3%. It just makes you look like something bad's happening. Something's bad behind the scenes. I need to dump my shares immediately. That's what it's making people think. It's a shame that Chama has 14 million shares using XTB here in Romania. Wow, never heard of these platforms. Representing Sweden, getting us morning 8:44. Good guys. Jerusalem. It's dropping pre-market. Yes, I got it up for you guys live so you guys can watch the stock every penny. Have fun with that. Why is it dropping already? I don't know. I just think it's this is the game that they play. Remember this stock has 44% institutions now. So there you go. I mean, 44% institutions, they own freaking half the shares almost. So they can dump shares in the morning, if they want. And that's probably what it is. They're messing with the algos, dumping shares. Uxbridge, just north of me in Toronto. Yep. I went snowboarding out there. Did all right. It was just so cold. Holy crap. Dropping to be bought cheaply by the big boy. Yeah, it's definitely if it bounces up, like let's say 7 to 7:30 before the earnings even come out, you can just tell they're just gobbling up shares. What time is earnings? The earnings is at God, man, I answered that question so many times, I'm making me forget. Earnings are at 8. The report is SoFi's Waterloo. It's finished if they don't come through. Oh man. That's what happens to almost any stock trading at these levels. Palantir was here. Robinhood was here. Everybody's at these freaking under 10. Nubank, guys. Look at Nubank. Nubank was at $3. Buffett was loading at 10. What does that tell you? Nobody knows sometimes. I mean, there you go. Third top 3 billionaire in America or the world or whatever. And the guy's 50% underwater on his IPO investment. See? That's how it goes. Billionaire buys at 10. He's underwater at 3. Look, now he's in the green. It's $12, $13. So look, there's Nubank, one of the best performing stocks over the last 18 months. Buffett was underwater $7. Like, sucks. Like, it's just part of the game, man. It's been finished. So bad in pre-market, dropping 2%. Zacks consensus for revenue is pegged as 563, indicating year-over-year growth of 50. Yep. Yeah, I think the analysts are at 567, something like that. SoFi to 859, then fall back, same old play. Yep. I mean, it could until it doesn't. Pre-market volume is a joke. Holding 30,000 shares. It's about to ruin my life. Man, you got a lot of money. You got that many shares. The report is where they throw the dirt on top. Hugs from Spain to all my American homies. This is our pivot point. Economy is not in a great position for SoFi to have done well. Yeah, Q2 wasn't the hot quarter. Now expectations are low. If they smash the earnings, we boom to the sky. And an increase in guidance. Big one. I bought way too many shares to lower my average. Need a good pump today so I can balance my position. Fair enough. Not bad. Not bad. Slovenia. Remember, folks, Noto the Saint is a business partner of Chama. When was SoFi supposed to report? 8. 8 Eastern South Florida time. Shorts realize they are screwed, so they're blowing their load extremely early. Could it run back? Could it run back up 9 to 10 with good earnings? Yeah, I think so. 42 minutes. Oh, that was a couple minutes. Damn, guys, you got a lot of comments. I'm trying to read up on these. What will the price go up for Sofi? I mean, if it's good, we're going over 8. If it's good today, we're gonna break over 8. 20 in the year. They need to raise guidance. Yes, I have a core position for long and calls for short. Put for premium. Awesome. More than 230 in line, not even 50 like. Yeah, guys, can you hit the like button? We need to hit the like button for the algo. Find it. YouTube algorithm. I need a lot of likes. We need a lot of likes. We're gonna get this bad boy pumped after earnings. And we got 28 minutes. So 28 minutes left. Let's get the algorithm booming. Hit the like button, drop a comment. Let's get it going. Okay. 28 minutes. 28 minutes. Holding for 14 at least. Have 550, 1350, and holding tight. Palantir me. Why would you sell before this thing goes parabolic and gives you a dividend? This is retirement for me. Yeah, man. I think a dividend. I think a dividend in the next. You see companies like I've seen unprofitable companies, believe it or not. Like there was a semiconductor company that's unprofitable giving a dividend. I think it was Marvel. So we're gonna be profitable. I think we can get a dividend in the next 5 years after they do their crazy growth investment. Profits should be up to 5 years. Profits should be 3-4 billion dollars or something like that. We get a dividend next 5 years, no problem. Check PayPal. Had 100,000 shares. Too much was on Martin to go through earnings. I trimmed to 40. Okay. Buy back at 9. I'm telling you, this will bubble in less than 2 months. When a time starts, the day we could be sitting at 14 and double from that. That's what I'm saying. Once it gets to like, that's what I keep saying. Once it gets to 10, then it's like different because then a double from there is 20. It doesn't seem so crazy. It just seems so crazy because of these levels we're at right now. I feel like the real rocket is going to be Q3 for comparison. Yeah, Q3. Thoughts on Pfizer? I'm not a big fan of anything pharmaceutical in America. There's a lot of scams going on in America these days. Man, this stock is in deep shit today. Can you please explain what table you are looking at? Table? This is the pre-market. Pre-market trading. Just before 9:30, the stock's trading the pre-market. It's on Webull. That's all it is. Good morning from Florida. Me too. Last exact quarter before earnings, we went red. I think today, yeah. I mean, last quarter was different. We were green the day of, and 2 days straight we were green. This stock's hurting me so much. Yes, it's been hurting me too. Broken stock. We all agree. Broken stock. 7 a.m. Eastern, they are releasing the call is at 8. Yes, that is correct. That is correct. Let me get the Sofi investor relations. Let me get that pulled up just so I have it ready. Come on, baby. Come on, baby. Conference calls to dial in by phone. One second, guys. What the heck? There we go. Perfect. Okay, baby. There we go. All right, all right, all right. Twitter really went to crap after hinting to the left. That coming, yeah. Dude, Twitter got woke. Just canceling people, blocking accounts. That was scary. I'm not a fan of Jack Dorsey at all. Like, I don't think I could get behind block with or square block with Jack Dorsey behind it. That guy is pretty scary. It's the evil fat finger shorts. Stock pops. We get shares at 6 and it explodes because they raise guidance. We're being shorted by international banks. They see a major recession, and we are using SoFi as a proxy to short the entire financial sector in the USA. SoFi doesn't have the same uh credit box as a lot of these other banks, and SoFi is cruising along. These last quarters were supposed to be rough, and now we're supposed to be making our way out of the quarters, the harder quarters. What's your average, bro? My average is under $10. Second half 2024 and to 2025, average 16 in Spain. Wish they had SoFi in Spain. Singapore, Hood. Hong Kong is an empty broom closet, another failure by elite team. Contrarian Bull. Netherlands, 212. God, Lee, you guys are tripping me out. Greetings from Alaska? Where do you buy your stocks on in Alaska? That's crazy. Thank you, live. Hungary. Oh my God. Hamilton, Ontario. How high do you think this will go today? If it's a perfect earnings, should be over 20%. If the guidance is crazy, should go over 20, maybe 25%. That'll probably put you at like $9, something like that, right? 25% from here is $9, right? Man, why are they fucking with the pre-market so bad? Let me see what's up in the pre-market. Oh my God, Affirm, give me a break. Why is Affirm up in the pre-market? Bro, Affirm is so like institutionally traded. Like those guys just pump that thing whenever. Same thing with Upstart. Upstart literally was like $34 like last week. Like they just pump and dump the crap out of Upstart. That thing is that thing trades so weird. Oh my God. Let's get back. London, baby, 212. All right, guys, we're getting closer. 22 minutes. Can you do me two favors, please? Subscribe to the channel, smash the like button for the algorithm, and take this link and throw it in stock twits, throw it in Twitter, chat forums, just get the stream going. This was the first stream live streaming the earnings today. I think we were the first ones. I mean, I got up early for you guys, and we're going to be catching all this live. So if we're going to feel the pain, we're going to be feeling the pain together, guys. If it you're gonna see my reaction, and whatever I read, you're gonna know right away if it's not that good. I can't lie because I own the stock. It's either I'm gonna be like holy shit, or if I go like this, but guys, if I go like this, like that's a bad sign. So that's why I usually don't like to do these live reactions. But hey, we're gonna get a really crappy meme of the stock doing bad, or we're gonna get a really good meme. So let's just find out what it's gonna be, because we're gonna be watching this bad boy live. I'll let you guys watch the stock reaction, and then I'll go hunt down the earnings, because the presentation on the SoFi website kind of lags. You kind of get there's like Stock Titan. They come out kind of first on the chat forum. Stock Titan, they usually drop it pretty quick. So I'll probably just read that off for you guys. You can watch the stock while I'm reading it off, and then we'll bust open the investor presentation when it opens up. So if I go down, you guys are going down with me. So just be prepared. This is the stock market. It is going to be crazy. Noto gave a DJ over $1 billion for a pile of junk. That's kind of funny, but I don't know if it was a pile of junk. I think they did like $100 million in revenue. I don't think that's junk. It's kind of funny though. Triple B, so if I goes down, I buy more. Okay. Can you say how many hours are left instead of a time? We are in different time zone. Okay. 20 minutes till the earnings are shown, that they release the earnings. 20 minutes from right now. Earnings call, 1 hour and 20 minutes. So that's the time frame. So 19 minutes till the earnings. 19 minutes. 19 minutes. Earnings call, 1 hour, 19 minutes. Hi from Romania. Hi from New Zealand. Problem is that 1 billion was hard money. Yep. Dilution's part of the game. Hi from Denmark. Let's get 9. Let's go. Nervous. Only guidance matters. We'll put that up here for you. Sorry, guys. I don't live stream, so I forget like how to do stuff. My bad. Pop the comments up that are cool, funny. It's a good one. James, it's headed to 6. Thank you. Good morning. Final shakeout. Ooh. Papa Pow will cut. Yeah, that one's funny. Papa Pow. I like that. That's funny. 71. I don't know what that means. Stock price? That'd be crazy. Damn, guys, you guys are commenting so fast. I'm reading these comments like lightning quick and I cannot catch up. I've literally read almost every comment, guys. I mean, when I wake up and then I went into the earnings last night, I was so tired. I couldn't process anything. I was trying to read the report. I couldn't even process like what I was reading. It took me like 5 minutes to like absorb what I was reading. And I was just like, my mind was just so cloudy. And so I got no sleep tonight. I feel so much clearer because I didn't lay down. I'm not tired. You know what I'm saying? So just waking up, going into a live stream, it's just, I don't know. I don't have that energy. I got that energy right now. No sleep all night. I have my own business, so I make my own hours. So, if I want to reschedule something, I reschedule it. That's how it works. Got my own business. YouTube is just for fun. It's not my business. No, I do cleaning. I clean buildings, pressure washing, and stuff like that. So if I want to pull all nighter, I pull all nighter. That's how it goes. East Coast, fingers crossed. Stocko, are you going for Trump or Harris? I mean, Harris. I mean, she's literally been in the thing for like 5 days. Like people are already voting for her. They don't even know what she's like promoting. It's just like she's just Biden's backup. I'm going for Trump. You know, Harris was part of the last 4 years, or 3.5 years, and I just want to see something different. Let's just see something different. You know what I'm saying? Trump was best. Let's go. 20% rise, guys. Let's just go into Noto real quick. He knows what he has to do. He knows where the stock was trading. Think about it. When they finalize these earnings, like let's say when they finalize what they're gonna release, they probably like wait till like the last just couple of days. You know what I'm saying? Like they probably finalize what they're gonna actually say, like probably like 3-4 days ago. He knows where the stock's trading at. He knows how bad the company's getting shorted. He knows he has to bring beyond the A game today. He knows if the guidance is soft, he knows like he's not gonna get away with it. He has to. In business, you gotta it sucks. It's pressure. If he puts a crazy guidance out, he's got more pressure for the next 3 months. It's just he's gotta put it out there. He's gotta go a little more aggressive. That's stock's gonna get crushed. This guy's smart. I mean, look at what he's accomplished in his life. I mean, like, come on now. Like this dude's like literally less than 9 months away, 6 months. The stock's a little higher. This guy's a S&P 500 company, top 500 in America. You know what I'm saying? That's how close he is. Okay, being a top 500 company, there's freaking tens and tens and tens and thousands of companies. You know what I'm saying? Like he wants to be in the S&P 500. Obviously, he wants his bonuses. Okay, it's just the Fed is just messing with their heads with, hey, we're doing 8 rate cuts. Hey, we're doing 3 rate cuts. Hey, we're doing 6, 5. You see what I'm saying? They had to just play conservative, back off the lending, drop their outlook to 1 or 2 rate cuts, and they just need a rate cut to get rolling again. So Noto has to crush. You know what I'm saying? Like the stock's gonna get crushed if he doesn't bring the crazy, crazy guidance. Okay. I don't know what the hell the guidance is gonna be. I have no idea, but I'm thinking let's boost the profits up 10 to 15%. You know what I'm saying? That'll do some damage. Okay. Boost your net income from what is it right now? 165 to 175. Boost the 165 to 175 to 195, 205. You know what I'm saying? If they do that, that's pretty damn good. That's like 15% increase net income guidance. So that's the stuff we're looking for, right? Um, he has to, or he's gonna get crushed. You already know it, man. Let's see. Portugal. Yeah, I think he's gonna sound confident today. EPS. This is pretty much what I'm looking for, guys. 2 cents, 585. This is a beat. What is impressive is a raising guidance for Q3. Stock goes to 850. Yeah, guys. Keep it simple. I'm looking for 585 today. Want to see 585, 585, 585, 580 million revenue. That's what you want to see. That's beautiful. The guidance from analysts was like 567. So it's a little bit higher than last quarter. It's still, not that Q4 boom that we had, but it's still solid, okay? So no revenue growth in tech platform. SoFi is just another bank. Yep, that's been the problem. It's been, I think 2 quarters ago it grew like 7 million. But hey, if this damn tech platform, listen to me right now. If you see a 15 million jump, that's gonna get it rolling again. Okay, that's the number I've been waiting for a while, and it hasn't happened. They hit that 7 or 8 million quarter. When I say jump, I'm talking about quarter over quarter. If they hit that 15 million quarter over quarter jump, Galileo is back in the green light, and people are going to be doing some deep dives like how the hell is that happening? You know what I'm saying? Remember, rate cuts coming, Fed talks tomorrow. Yes, maybe that's why Anthony Noto planned this bad boy on this specific day. Remember the convertible debt? He's got some whales in there that have, they got to get the stock to $12 to get their big paydays. So don't forget about that. We got some big whales from that damn convertible note that are sitting in there underwater, and those boys got to get to $12. So don't forget about that. This is the most manipulated stock ever. It's not. I mean, a lot of stocks get crushed to like fucking 10 cents and go off the market. So it ain't that bad. What part of Florida? South Florida, Tampa Bay. Let's fucking go. Hello from Augur. Patience, all you need. Come on, guys. All right, we're getting close. We're getting close. Okay, it's getting serious now. It's getting serious. No more joking around. Smash the like button, drop a comment, and share this video. Freaking earnings are about to freaking drop. 10 minutes. Y'all ready? Shit is not a joke no more. We got money on the line. This is not a game anymore. Are y'all ready? I'm getting the heart, the blood, the temperature. I feel it. It's spiking. It's happening. Fuck. It's coming, bro. It's coming. More coffee. What time is it releasing? It's releasing at 7 Eastern, 10 minutes. 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 Share this video. Smash the like button. Game time. Puppies. That is crazy. I was over there a couple of weeks ago. Hong Kong, baby. If it's a good earnings, we're going higher than that. Yeah, of course. If it's a blowout, freaking we're launching. Ireland, 563. Fly. That's what I'm buying you so far. Mad North, Ireland, Kuwait, Hong Kong. Go under 7, then 8. Cowboy chances they announce big. What are the chances of this? Well, since we freaking heard they were in talks the last 3 to 6 months, I don't know if they will release. They're not going to release the name, but they would release like, hey, we signed a top 10 bank in America. They would say that. And since they've already said we signed a large regional bank, which is probably like the large regional bank was probably like a top 30 or a top 20 bank in America. Freaking there's like a 50% chance they'd say if they landed it, hey, we landed a top 10 bank in America. They won't say the name, but they've already said, hey, we've landed a large regional bank for our tech platform. So yeah, 50-50. I don't know about right now, but yeah, I mean, if they land it, they're gonna say it. They landed somebody, they're gonna say it, you know? I'm not really watching the Galileo counter. I know that's important, but I wanna see actual monetization, you know what I'm saying? I wanna see revenue. I don't really care about account numbers. They got the accounts. They got the accounts. I wanna see revenue. I wanna see revenue. The SoFi earnings gets released in 8 minutes. 8 freaking minutes. God, guys, you don't understand. This stuff is nerve-wracking, man. Like, that's why I usually watch it with the live stream off, and then I absorb the earnings and then I start tweeting and stuff. But man, they are crushing the stock pre-market. 3%, 4. What the hell, man? 4%. These guys are not playing. Guys, I'm telling you right now, this is crazy. I mean, they are tanking this bad boy. Let me check something real quick. Yeah, they're just fucking playing games. Yeah, they wouldn't release earnings early. So yeah, they're fucking playing guys, they're playing fucking games right now. I'm sorry. Come on, guys. Let's get ready, baby. Zimbabwe, Hong Kong, New Zealand, Tampa, Sweden, Germany, Malaysia, Danny Deals, UBS, Serving Hong Kong. Do we got a good quality right now? Internet's on. Is the internet looking good? No lag. Let's go. The earnings release 7 minutes, guys. 7 minutes. 7 minutes. No time. Screw the time. Screw where you're at. Don't worry about the time no more. 7 minutes. You just heard me say it. 7 minutes. Don't check the time. Don't worry about the time. 7 minutes. I know everybody's different time zones. 7 minutes. Oh, fuck. I don't know how to do all that. I'm sorry. Brazil, okay. New Bank, Nebraska, Australia. Guys, I think up. I just think Anthony Noto, he has to physically bring the stock up. Okay. It's not about doing your job anymore. It's about doing what the stock needs. Okay. He's been doing what he needs for the fundamentals. It's time to pull the rabbit out and do something crazy. Okay. Crazy guidance, freaking new UI update, Galileo Bank platform partner. It's time to really do something special, not just drop the earnings, soft guidance. He can't soft guidance no more. He just can't. Okay, there's no more lagging guidance. He has to drop the fucking hammer. He has to drop the hammer, guys. He has to drop the hammer in the next 5 minutes. He has to. That's it. Okay. There's no more soft guidance playing around. There's no more time for that. Okay. Denmark, New Zealand. Rocky said, appreciate it, man. Appreciate it. Mexico puts 20 minutes. Hour. Anyone buying 650 fills? I think you're off by an hour. No, I'm not off by an hour. The earnings release in 5 minutes. The call, you guys might be talking about the call. That's in an hour and 5 minutes. 6 o'clock or 7 o'clock, 5 minutes. Let's go pre-release. Yeah, exactly. Guys, someone just said I'm wrong. I'm not wrong. 7 o'clock. It's an hour split. The earnings drop, then the call drops. Earnings, call, earnings, then the call. Earnings drop, then the call. 1 hour gap. Oh, fuck. Here we go, guys. Here we go. Here we go. Here we go. Here we go. God, man, I'm getting nervous. I don't do this stuff on the damn live stream. It's too much, too nervous, man. I just rather just read the earnings and go live, but there's no backing out now, guys. This is it. 200 Washington Olympics, Belgium. Who do you use? I use Sofi. Expectations. The expectations are 565, 567, 565 million. I'd like to see 585. I'd be happy with a 585, but yeah, 565 is the revenue, okay? 565 is the revenue. Like to see 585. Net income, it's really low, 5 to 10 million. Getting a little bit excited, but hey, I like a little 30 million profits, okay? Those are numbers I don't want to get too crazy and say, hey, 610, 620, they're going to blow it out of the water, 630. I don't want to do that. 585 I'm looking for, but the guidance is 565. Still a nice little jump from the 565. So SoFi's official bank. Turn our lower, bro. Okay, guys. All right, guys, it's getting serious. So I'll probably, instead of doing this the thing right here on the Weeble, we're gonna just switch you over, and we're gonna switch you guys over to Robinhood. Okay, this is all active. Look, this is everything's active, so you can watch the stock live, whatever it does. It could get crazy. Everybody just relax. It's gonna take 2 minutes for a computer, a real person, like to really absorb the earnings and decide if they want to freaking buy it. Like anything you see in the first minute is just bullshit. Okay, it's gonna take a couple minutes for a real person to absorb the guidance and stuff. God damn, they are tanking this bitch. See that shit? They are tanking it. They're going for the kill today, bro. They're going for the kill. Yeah, it sucks, guys. That's a big drop, 4%. Freaking. Okay, guys. I'm gonna just jump to the comments at the top. I'm jumping straight to the top of the comments, guys. Here we go. Relax and do it. Okay. All right, guys. Yeah, they tanked this bitch. They tanked this bitch. Pre-market 4%. We're green the last earnings, but yeah, they definitely tanked this bad boy. All right, guys. So we got 2 minutes. I am going to go hunting. I'm going to go hunting for the earnings right now. Okay, I'm going to go hunting for the earnings. Let me just pull up the SoFi investor relations real quick. I got about a minute. Okay, I'm going hunting, guys. Y'all ready? It's coming. It's coming, guys. Okay, it's coming. You got under a minute. Under a minute. Just suck it up. Okay, suck it up. Here it comes. This is it. It could be like a few seconds. Could get ugly. Could get ugly. Could get ugly. Just be prepared. We're looking for 585. Here we go. We're getting close. I'm just in the chat. I'm in the chat. I'm looking for like stock Titan. All right, guys, we're getting close. Here we come. It's not 7 yet. It's coming. Any second now. Any second now. Any second now. Here we go. $7 earnings are gonna drop any second. Any second. Looking for stock Titan. Here we go. Here we go. Here we go. Oh yes. Oh yes. Oh yes. 599 million revenue. Net income 17 million. Solid. Solid. Okay, we'll take the profit was all right. The profit was all right. 17 million, but the revenue was good. The revenue was good. The revenue was good. That's good. That's good. That's good. 599. We'll take that. Here we go. Here we go. Here we go. Adjusted EBITDA 138. Not bad. Management raised full year guidance, expected adjusted net revenue between 2.425 and 2.465 billion, and adjusted EBITDA between 605 and 615. I think they raised EBITDA by like 20 million, or 10 on the low and then a 20 on the high, and net income went up $10 million. EPS 9 to 10 cents. So they jumped it up 10 million on the net income. Decent on the increase guidance. $10 million net income went up. $10 million. Not bad. Not bad. Not crazy. It wasn't a crazy increase. So I'm trying to process. I'm trying to process it. Revenue was really good, solid profit. Little low. I thought it was gonna be like 20 to 30. So 17 million profitable again. They raised net income up 10 million. Thought it was gonna be a little bit more, but we'll take that. We'll take that. Let's see. Let's see if we can get in here and take a look. Okay. Yep, it was a triple beat, guys. It was a triple beat. They beat revenue, they beat net income because they expected zero and they raised guidance. So you got the triple beat across the board. So that's a triple beat. You know, they do this all the time. Trying to get the damn earnings pulled up. They're so slow to do it on the they're so slow to do it on the hey, I'll be back, guys. I gotta do some stuff. All right, hang on a second. Stock's being a little weird. It's just like flat, kind of, right? It's kind of weird right now. Hang on one second. I gotta just put some data points out for everybody. All right, guys. If you want the earnings, you know, if you really want to look real quick, just scroll on my Twitter real quick and you'll get the full details. Everything is there. Let's go over to the. Man, why the fuck can I get the earnings on SoFi's website? Why the fuck? Yeah, there we go. Sorry about that, guys. Let me read your comments real quick. Pre-market's down. Now negative 4%. Guys, they beat everything across the board. Everything was beat. So they had a zero. Listen, they had no profit. Okay, no profit. 17 million profit. Let me take a look here. Here we go. We're off the stock real quick. We're off the stock. Let's see what we got. Oh wow, look at that, guys. Look at that. Look at members. Jesus Christ. Look at that. 643. That's the first time I look at that. Wow. Damn. That's pretty damn good. Let me screenshot that. Wow. $643. That's pretty damn good. I like that. I like that. I like that. Wow. Soups, gotta fix that. All right, baby. Guys, stock's going back up. I'm telling you guys, that they freaking beat zero EPS. No, they had 17 million profit. Like, come on now. Come on, guys. We're straight. Like, we're straight. Let me keep going. Let me keep going. We're back at. We're back at. Okay, new products. 946. Not bad. Galileo counts. Wow, look at Galileo, baby. Look at that. Look at that. Plus 7 million. I like that. I like that. Lending, products, 19%. Financial services, 39. I mean, guys, they still haven't absorbed this. Let's see. Credit card made a big jump. SoFi Invest went up a teeny bit. Relay went up like crazy. SoFi Money's flying. I wrote 40 million on paper and people. NCL 6%. That's good because I was hearing like 7 plus or something like that. So 6%, that's good. This is for the Bears. This is for the Bears. I'm not going to go into this, but this is for the Bears. This is for the Bears. Always trying to. Let's see how this stock's acting a little weird. Okay. Let's see. Here we go. Guys, I'm liking that revenue though. This is a record revenue for the company. Look at this, 597. They finally beat Q4. Adjusted EBITDA is down a little bit. Man, I like the revenue. That was where I got excited. You guys saw when I got excited. Okay, let's see. Okay, they beat damn, see, they smoked the revenue. Look, they beat the revenue by $30 million on the high end. That's awesome. They usually only go to 20 million. That was really good. Adjusted EBITDA beat the high end by 13, so EBITDA came in a little low. Let's see the guy. Damn. Oh, you guys are tripping. You guys are tripping. Oh, bro, they're killing it, bro. Look at the dog. Come on, y'all. Are y'all? I'm in the chat. Are y'all? No, you guys are tripping. Whoever's saying you guys are tripping. Some people are tripping. Bro, I'm just breaking through the earnings and like, man, what I just seen for fucking Q3? Are you kidding me? Guys, look at this shit. 625 to 645. They just put up a record revenue, right? Record revenue, 597, the highest in company history. They're back in growth drive. What if they smash this shit by 20 million, 30 million? We're fucking heading to $1 billion soon in quarterly revenue. Like the revenue is exactly where we need to be at. I'm so happy with the revenue. Adjusted EBITDA looking extremely solid. They're probably going to clip 190 on that. Net income, they're finally, bro, we're fine. Look at the net income. No more of this $5-10 million profit bullshit. Look at that. They're putting up 40 to 45 million for their freaking guidance now. Do you see this? Look at this. Q3, we're finally like starting to grow and roll in profits. Look at this shit. 40 to 45 million. Okay. We just had 5 to 10 million on our guidance. They're stepping it up every 90 days now. Like, bro, this is okay. I wasn't extremely happy when I saw like the net income. That's the only thing I didn't really like. They didn't increase the net income crazy full year. They only went up by $10 million. I was hoping for like more than that, 20 to 30. But now we're starting to see what this company is starting to look like. Look at this shit right here. Look at the Q3. That is what I'm liking. I'm liking that. Okay. Look at this. I mean, they're probably going to put up, my guess, $70 million next quarter. I mean, they're going to smash. They're going to smash like their guidance if they come out crazy in Q4. They're starting to turn it on. That Q3, I'm loving Q3. I'm loving Q3. Anyone say they don't like Q3, they're crazy. Let's see. Here we go. Yeah, it looks like the cap ratio is still staying like near the same. It looks like they're not going crazy with lending. Financial services revenue were more. Oh my god, they were at 75% growth. Now they're at 80% growth for financial services. Tech platform net revenue percent of mid to high teens. Looks like they backed that off a little bit. Okay, let's see. So they jumped up the revenue by $35 million. So guys, we're at 14 to 16% growth. Now we're at the 17 to 19% growth. They jumped up EBITDA by 15 million on the top end. Like I said, that net income 10 million. That's the only thing. That's the only thing I didn't like. The so far that's the only thing I didn't like, guys, was the net income, the full year increase. I wish they just 20. So they did the full year increase and guys, that's the only thing. That's the only thing I didn't like. Net income, they went a little soft on the net income. Let me go to your comments. Let me go to your comments. It's not good. Rate cuts soon. 650 this week. Start buying people rate cuts. 9 today. Amazing surprise. Guys, we told you not to get like we told you to freaking not get overwhelmed. We were looking for 585 million on revenue, right? 599. The analysts wanted no profits. We came in at 17 million in profits. You wanted to increase full year guidance. They bumped up revenue $35 million, EBITDA 15, net income 10. So that's the only thing, the net income. That's the only thing. See what I'm saying? Everything was crisp across the board. Second highest members all time. Damn. Yeah, full year EPS, I went up a penny. That's why I wasn't really looking at. I wasn't paying attention. But they went up a penny. Let's say they go up one more penny, and then they beat that penny. They'll be at about 12 cents. That's a big jump from 7 to 8. I mean, you hit 12 for the full year. So I'm saying, guys, 585. We just guys, listen to me real quick. Real quick, just listen to me, okay? What you just saw without that, remember that last quarter, that bullshit debt restructure boost on your revenue? That was the highest revenue in company history. They beat the Q4. They beat the Q4. That was the fucking crazy quarter. They beat the Q4 on revenue. They didn't beat it on profits. They were probably trying to scale a little, scale members. Look at the members, second highest all time behind Taylor Swift. They're setting up something huge for Q4 if they get the rate cuts. Listen to me when I'm telling you this, guys. Listen to me real quick. Listen to me real quick. Q4, are you ready? $100 million profit or more. No questions asked, okay? That is what they are setting up for. This is a really good earnings. Q4, I'm telling you, whatever they put out here, let's say this says 185, they're going to raise it one more time and then they're going to fucking smash it, okay? You're going to see $100 million profit in Q4 if the rate cuts come because they're planning on 50 million plus revenue or net income next quarter. I look at this. The stock's green, okay? The earnings are starting to get absorbed. Look, the stock's green, okay? The earnings are starting to get absorbed. I mean, there's some things that, it's not perfect, but this is a really good quarter. They just can't tank this, okay? You see shitty stocks all the time fucking down 20-30% on a fucking earnings report, okay? I was reading this shit. I was like, there's no way they can tank this shit. There's no way. This shit is green. Everybody has absorbed the earnings. I mean, it fucking took me 15 minutes to read through this shit. Guys, I'm very happy. I'm very pleased. That Q3 fucking 50 million profit. We just were profitable 6 months. We just started. I mean, we're starting to turn it on. 100 million profit Q4, guys. 100 million profit Q4 is coming. Okay? God, we're looking good, man. We are looking good. Man, I gotta see what you guys are saying. Let me see what you're saying. Is this an official beat? Yes. This is a big beat. Yes, correct. 17 million. That's what they netted. It was solid. They were looking for 0. The analysts were looking for 0. SoFi put out 5 to 10. It looks like it was a scaling growth quarter. They weren't going for big profits. So 17 million is a beat. Solid. Oh my god, it's just starting. Triple beat. 10-12 easy. Guys, I'm telling you, if they do some rate cuts, or they announce some rate cuts coming soon, this stock could be by Friday. I'm telling you, this thing could sky. Green. Going up. Correct. I'm telling you right now, the way this shit is setting up, I know some of you guys aren't long-term investors, so hey, this isn't really long-term, okay? Listen to me real quick. Q4, if the rate cut happens and is guaranteed, they will print $100 million profit. Just think about that. Yeah, they're gonna raise it again and then smoke it. So CI 12. It's just more pre-market games, guys. Don't even worry about it. Okay, the earnings are strong. Let me see what Seeking Alpha is saying. Let me see what Seeking Alpha said. Let's see. I mean, guys, look at this shit. Just look at this shit. Look at this shit. SoFi Technologies beats top line. That's the one I got crazy about on the earnings. I was like, what the fuck? 599. And the bottom line, the 17 million profit, initiates Q3 and updates 2024 output. Oh, come on. Why did I say update? That's not an update. That's one little word. They should have said increase. Someone, whoever wrote that is freaking douchebag. Updates. Just say increase. Why the fuck would you put updates? Fucking idiot. Who the fuck put that? Let's go. Losses are over. That's what I'm saying, guys. Dude, the profits are about to start kicking in. I mean, you could be looking at 70. You could be seeing 60, $70 million the next quarter. Q3 could be like 70 million profit, guys. I mean, I'm very happy with that Q3 outlook. Like that Q3 outlook, let's just do the math real quick. What are we looking at real quick? Let's just see what we're looking at. Got an 88 plus a 17. Let's call it a plus 60 and then a plus 80. Oh god, guys, they're going way over this year, guys. They're going way over. I'm telling you, you're gonna get like a 60 and an 80. They're going over 250 net income this year. First year ever. They're going over 250. That little 180 crap you're seeing, that gave them some cushion. Let me see 1 million. Let me see the deposits. Let me check those. That's kind of low. $2.3. I don't remember what it was. I don't know. Let's see. Forgot where I'm at. I forgot where I'm at. There we go. Damn, we got a long got a while till the damn call. Holy shit. This reading all that earnings seemed like such a long time. It's only been 20 minutes. I felt like I was reading that thing for an hour. We're gonna get a cut. Yeah, I'm sure they're gonna address that. Like, I don't know. I don't know why. Because members skyrocketed that quarter. Like, and they were at 3 million for like 5 quarters straight. So that's kind of weird that the deposits drop like that. That's kind of weird. Stupid. But yeah, isn't that weird though? Is that a good? Isn't that good? Because come on, guys, if the earnings was trash, let's be real. Let's just think psychology right now. I did some psychology in college. If the earnings was trash, right? If the earnings was trash, we would be fucking bleeding out red 10, 8, 12, 15%, right? We would be getting smoked right now. Everybody can agree on that. If bad earnings, you can't beat Wall Street. You're going down, right? So I believe the earnings were good. Not immaculate, but they were good. They smashed fucking Q2 revenue. Q3 profit is looking juicy. Increased full year revenue up to 19%. Profit a little slight tick up. You're flat now, right? Isn't that kind of weird? You're not green or red, you're flat. Something fishy. Something fishy in this pre-market, man. I don't know. Pre-market's feeling fishy, man. Pre-market's feeling fishy. I don't know. I don't know. It's feeling fishy to me. PayPal mooning. Yeah, it needs to moon. It's down from 330 to 50, 60, 330 to 60. It's got a while to get to 300. It's got a long way to go to get to 300. So it should moon. All right. Let me take a look real quick at that let me take a look at that Galileo revenue because accounts went up. Let me see. I want to see where the Galileo revenue was real quick. Let me see. Technology platform. Fuck. Damn, man, what the fuck? Galileo was flat. I don't like that. That's one thing I don't like. Technology platform was flat. So where's all the revenue coming from? Holy shit. What the fuck? Look at financial services. You guys see this? Look. This is financial services right here. Look at this. Are you guys seeing this? This is Q1, right? This is Q2. The biggest jump they ever had was 20 million. So that's ridiculous. That right there is crazy. Yeah, that's I just don't I don't I don't understand Galileo, man. Guys, I have my own business, right? I don't know why it's taking so long to monetize. Like, that's a good jump in accounts. Where is the revenue? Where's the revenue on Galileo? I don't like that, man. Why is it stalling out like that, man? Like, do they have a whale on there? Like, I mean, no, that's a good account jump. It's just like, where's the revenue at? Like, that I don't like, guys. That I don't like. I like this fucking financial services. You guys see this? No, earnings has been out for 25 minutes. It's been out for 25 minutes. Man, I don't know. This is I don't know, man. Let me see what people are saying. I want to see what people are saying. Hmm. Man, I'm just looking. I'm trying to just see what people's reactions are real quick. some comments crack me up. I'm sorry. Some people just make me laugh. Okay. All right. We'll move you we'll move you guys back over. Let's go. Where is SoFi? I remember guys, SoFi. We were at like 127. Ah. Ah. Where's SoFi at? Where is he at? Did I pass it? Did I pass it? Where's SoFi? Where's SoFi? No, she's no, SoFi. No, there's no way. Did I pass it? Oh, top 20, eh? Oh, you go from 130 to top 20. Are you waiting on Jerome Powell to talk? Are you waiting on Jerome Powell to talk? I think somebody's waiting on Jerome Powell to talk. The market looks like it's waiting on Jerome Powell to talk. Hmm. What do I think about this earnings? Here is the truth. I will give you the truth. Q2 revenue, highest in company history. Amazing. Beautiful. $599. I love it. Profit, solid. 17 million. It was solid. Member growth, second highest company all time, 643. Awesome. Great. Great. Q3 guidance. Holy crap. Amazing. Freaking, we're flying up another 50 million. Like they're turning growth back on for Q3. Growth is turned back on for Q3. Look at the profit for Q3. 40 to 50 million dollars. Are you fucking kidding me? They're gonna come in like 60, 70, and then fucking $100 million for Q4. Problems. Great Galileo count growth. No monetization, just revenue flat. I don't like that. I didn't like that. Galileo is pissing me off a lot. I don't like that. Financial services. Holy shit, that thing's growing faster than 90% of SaaS companies in the market. I give this a B plus, B minus earnings. I mean, freaking solid. I love that Q3. That Q3 was beautiful. Damn. Yeah, SoFi's looking solid. Let me read the headlines. Let me read these headlines. What we got? What we got? Look at that. Look at that. There we go, Barons. Look at that. Barons. Holy crap. SoFi post strong quarter. Transitional year is going well. I like that. Net revenue 599, net income of 17 million, making third consecutive quarter of GAAP Oh my god, I'm liking these headlines. SoFi Technology expects 4 cents EPS Q3. Damn, bro, these are great headlines. Raises full year revenue. Raises EPS a penny. Oh yeah, guys. Oh yeah. Oh yeah. Oh yeah. The headlines are money. The headlines are money. I didn't even read the headlines. The headlines are money. Oh yeah. What are you talking about? What do you mean get my facts right? Yeah, it might have grew because we had a crappy quarter comp, but look right here. This is don't say get my facts right. I know how to read this shit. Look, this is the revenue. This is Q1 and Q2. It went up by $1 million. You see what I'm saying? This was the nice jump we had right here, like 2 quarters ago. This is I don't like this. See what I'm saying? I don't like this. I don't like this flat revenue. That's not good. So don't. Why are you calling me out? Get your yeah, they might have grew 20%, but the revenue, that's not good. I don't care how bad the comp was last year. That's not good. We gotta demand better than that, man. That's not good. Okay. That's why I'm giving this earnings a B minus and not an A plus. If that shit came in at fucking 10 million jump, we'd probably be at an A plus earnings. Guys, this is a B minus earnings. This is a B minus earnings. This was solid, man. Oh, now the stock's up a little bit, huh? They want to play flat for a couple, dude. I'm telling you guys, that Q3 was juicy, man. That Q3 was juicy. I'm telling you, man. I like that Q3. Man, let's go back to that real quick, man. Come on, let's go back to that. Let's go back to that Q3. Let's go back to that Q3. Are you kidding me? If this is where SoFi is going to be at in 2 months, where's SoFi going to be at in 2 years? These shits are going to be saying freaking couple 100 million profit. Dude, the party is starting, man. It's starting, bro. They're going straight to $1 billion a quarter. Then they're going to go to $2 billion a quarter revenue. This thing is going to be a monster. If we get the rate cuts, Q4, oh my God, man. I'm telling you, these things are going to be, you don't even want to look at these numbers if they get the rate cuts. These things are going, oh boy. My bullish case scenario this year is like 260, 270 million in profits. They are cooking something up this year, man. I don't know, man. I'm happy, man. Like, come on, man. I don't know. I gotta go look. I don't know where that's at. Man, let's see real quick. Let me see. Man, yeah, guys. Only thing, yeah, the Galileo. That's the only thing. Maybe that's why the analysts just haven't been really paying attention to Galileo because it hasn't proved itself, and it's still, it's Galileo, man. If they can figure it out, man, if they can figure Galileo out, man, this is gonna be a juggernaut, man. Because financial services is like, I can't even explain it, man. Let me see what let me see what people are saying. Guys, we got 25 minutes. 25 minutes till the earnings call, just so everybody's aware. 25 minutes. Okay. This is looking good for FOMC tomorrow. You bet, you bet, you bet. No, no, it's not. No, that's not right. It's like under 20%. Financial services is smoking smoking tech right now. Some people are getting excited. Some people are getting excited. Guys, That that earnings drop was crazy, man. That when I saw that 5.99, man, I was happy. That I mean, once I saw that 5.99, I was really, really happy. I mean, that was beautiful. Yeah, something might be broken. Go look at on my Twitter. I just posted Trueflation the other day. It's like one or fucking what is it? I don't remember. It was like I can't remember what it was, but it was like 1.7, 1.6% with the Trueflation data. It was bad, man. You're gonna see some upgrades. You're gonna see some upgrades with this one, guys. This was a good earnings. I want to see. Uh, man, let me, man, guys, see, I still haven't even. Let me take a look at lending. I didn't even look at lending. Let me look at lending. Lending, lending, lending. Damn, they're still doing. Yo, they're still doing good in lending. Look at this. Lending, they're still doing good. Look at this. Bro, lending, look at this. This is Q1, right? This is Q2. They smoked Q1 and they almost clipped freaking Q4 on revenue for lending. I mean, the expenses were a little higher, but the revenue, damn, man. Lending's still pretty damn good, man. Wow. I'm very excited. God damn, if they can, I mean, Galileo hit good profits, but it's, man, maybe it's some serious seasonality right now. I don't know, but they gotta just get this shit going, man. If they can get this shit going right here, this is crazy. Financial services right here. This is ridiculous. They are demolishing that, man. Man. Yeah, I saw that. I did see that. Almost about to rocket. Yep, it's just time for monetization, man. That's it. Time for monetization. That's it. Q3 don't look really transitional to me, to be honest. Yeah, Q2 that. Yes, I did see that. I remember reading through that. So yeah, landing is still doing very, very solid. Man, let me. Hmm. Guidance raise, triple B. Yeah, I don't know, boys. I want to hear what Noto has to say because, man, it looks like they're finna turn it on Q3 and Q4, man. It's like five, six different things. Yeah, maybe they'll talk about that 3.0 update. Maybe those. I don't know. I don't know, man. God, I'm feeling so much better than Q1. That's what I can tell you from my emotions. I feel way better than Q1. Okay, because Q1 you had that lagging Q2 right over your head, over your shoulder, and now this Q2 was awesome. And then Q3 is on my shoulder, like, damn, I'm happy to get to Q3. So guys, this is way better earnings than last quarter. I'm feeling really good, man. They're starting to rake in those profits. These analysts got to come up because these analysts, guys, hang on one second. You got to. All right, let me show you this. Let me show you this real quick. We're gonna go over to Yahoo Finance, right? Okay, look at this. Look at this. This is Yahoo Finance, right? Look at this, guys. 11 analysts have SoFi at 15.5% revenue growth. Remember that number. Remember that number. 15.5% revenue growth, right? 15.5%. 15.5%. Don't forget it. What does that say? Does that say 15.5% to you? Does that say 15.5% to you? That says 17 on the low end, 19 on the high end. Every price target has to come up fucking $2. The shittiest analysts. Like they are literally like someone needs to get a slap on the wrist from the SEC or a fine because these dudes are not listening to the company. They're making their own assumptions. Like I don't think can you I don't think you're I don't know, man. That's weird, right? Isn't that weird? Or am I tripping? These guys are now way off. Last quarter was 15 to 17%. Now we're at 15 to 19%. Dude, I don't know, man. These analysts, something's got to come, bro. We got to. I think we're gonna see some upgrades. Like, I don't know, man. Bye bye. I don't know, guys. The analysts, I'm waiting. Maybe today we get fucking a $16 price target by someone on the bullish end. I don't know. I told you guys the truth. Like I told you the problems. I told you the problems. The problems was Galileo revenue. That was the problem, and then the net income full year they didn't jump that up a lot. So that those are the two problems I seen. Dan Ives, he's the freaking AI super pumper, bro. Man, I don't know, guys. I'm feeling good. We got 15 minutes to the call. It looks like a lot of people are upset that the stock's not up 20% because we lost a lot of viewers. So people are not happy with the stock up 2% or 1%. So looks like we gotta wait on the earnings call and then wait on the Fed meeting. That's the only way you're gonna get your stock going up is if you get some rate cuts. Man, I'm just so damn happy about this is good, man. This is good. The guidance is good, man. They're headed in the right direction, man. Let me see real quick. If you guys want to watch the stock for a little bit. Someone said the shit is flat again. That's kind of funny. The shit is flat again. Let's see. Man, I gotta drop a tweet, man. I gotta drop a tweet for these damn hating ass analysts. 16.4. Did it go up a little bit? Yeah, they're still 3% under, man. They're 3% under the analysts or what SoFi's putting out. Let's look at PayPal. Let me guess, 10%? 7. Yeah, but they're fucking doing a buyback. Yeah, I heard they're doing a buyback, right? Are they like buying back right now? What's it say? PayPal. PayPal raises full year profits. Yeah, they're doing pretty good. But SoFi, guys, look at the guys. Look at this right here. Okay, look, this is what I want you guys to see. Look at this. So look, there's 131 growth stocks right now, right? That we're watching. Okay, you guys see that? 131 growth stocks. And look at this, guys. SoFi is in the top 10 today. So everything right now is getting like slapped and hammered, like in the pre-market right now. Everything. I think it's just anticipation of the Fed meeting Powell and stuff. So maybe SoFi makes its way to the top, maybe it goes down. But I'm just saying, like, ain't nothing really going bananas in the pre-market right now. Everything's kind of flat besides like 2, 3 stocks. So we're actually on the upper end right now of green inside of the market. It's kind of weird. Huh. A little strange. Like we're literally in like the top 10 of the pre-market trading right now. And everything's sucking. A seller is coming. Get some puts. Just put $1 million on it right now. 1 million. Boom. You got like 7 million when it crashes. Boom. Boom. 100 grand. You got your 700,000. You're gonna 700% return right now. Do it. Go all in. Just do it. If you're talking about it, do it. Don't be a talker. Be a doer. Unload. Buy every put you can. Just buy it, and you're gonna fucking look. You know what's gonna happen. 500% return today. Go get it. People talk. They talk. They just talk. Do it. Fucking 100,000 puts. Buy it. Open market. You can't buy puts when the market's not open right now. And the stock's fucking green. Your puts are gonna go to shit if you fucking bought them yesterday. They're worthless. Your puts are worthless right now if it opens up flat. Are you sure we go in recession with loans that people won't pay? Of course there is. What they really mean to say is our financial services are covering tech platform because financial services is doing everything. That shit is flying. God. This is funny. This is funny. What do you get for that? What is it like? What is it like plus 200? What do you get like what do you get 200,000 or what is it? What's it at? The spread or the whatever it's called, the odds. Nah, the beat is good enough. What are you talking about? That they hit record revenue. Company history was record revenue. They hit 599 and they had a nice profit too. Right, second highest members. Yeah, they did really good. Man, I hate to say it, but guys, the way you get these big live streams is when you're just live streaming for fucking 2 hours and the stock's up 20, 25%. That's how you see a live stream. That's just the reality of a stock market on a live stream, guys. Like we if SoFi was up right now, like let's just say 15%, we probably have 2,000, 1,500 people. It's just people see flat, they go to work or cut it or don't take their break. It's part of the game, guys. It's just I would have loved to see this thing moon. I'm sorry it's not mooning, but hey, the truth is it was a solid ass earnings report. That's all I could tell you. That was a solid ass earnings report. Like Q2 I was impressed. Q3 I'm really impressed. So we will see. We will see. We will see, man. I'm excited to hear what Noto has to say because they're doing something right, man. Again, members, I want to hear about the Galileo slowdown. Let's see where we at pre-market, guys. Okay, look, you just saw my list of stocks, right? Are we still on? We still on Weibo? Look, you see my list of stocks. It's at 140 freaking companies that I follow, right? Look at this. Following 130. Look at this. SoFi right now, top 8. Look at that. We're right here. Look at that. We're gonna, dude. The market's being strange today. Usually you see crypto fucking mooning, 7 crypto coins moving. The market is being weird today. We reported on a weird day, kinda, but it wasn't like a crash day. That's why we're green. But if we had a little bit of a better day, not this crazy volatility next to Powell, we probably be up like a lot more. But I mean, come on, what's y'all's honest opinions? Do you want me to go back to this? I mean, do you want me to go back and just? I mean, I'm sorry if you don't. I'm sorry if you don't know how to read this. It's pretty damn simple. It takes. If you can't read this, probably shouldn't be in the stock market. But this is good. Do you guys see this? We just hit record revenue. More records coming. Highest revenue in company history. This would be, if they smash this, highest profit in company history. And do you see what's happening? This is the effect. Like, think about it just on a quarterly basis. Ready? Watch this. Let's just think quarterly basis. 5 quarters from now, we're gonna be midway through 2025. Look, 50 million profit, 75 million profit, 100 million profit, 125 million profit, 150, 100. You see what I'm saying? It's a compound grower that's going to go to unjustified profits in 5, 10 years. Unjustified. It's just beginning. This is perfect. Like they're doing everything they can right now. They're getting people for the long term signed up, like member growth. I mean, like they are just killing it. Look at this. Members, second highest all time, 643. Look at that. They smashed last quarter. I think my estimate was 650. Fucking missed it by 10 million or 10,000. I don't know, guys. I want to hear your comments. What do you think? Buy shares now, headed to 8. Not good enough. What was not good enough? What are we talking about? We talking about I don't know what you're talking about. Like, you gotta tell me what you're talking about. All right. All right, guys. Yeah. You're right. It'll probably just smash them and we'll be up after Pal Talks. Let's see. Nice. Yeah. I mean, like I said, I was going like I wanted 20 to 30 million. I wish they would have hit that 20. 17 million, we'll take it. We'll take it. Solid ass. Oh my god. Come on, Steve. Wasn't ass. They're freaking their record they just hit a record revenue, company history. Give them a break. Mm. Yep. 2 minutes. I don't know. The headlines are very good, and they showed the personal loans under 7%. We're gonna see. It's getting short. Let's see where we at. I don't know, guys. The market's not really doing anything. Like if SoFi just ticks up like 5 cents, they're literally gonna be at 2% gain, which is literally right at the top of 150 stocks that I'm watching. So I watch all the pre-market days. This is just a weird day in pre-market right now. Weird little day. All right, guys. Call should be starting soon. Oh, I don't want to hit that music and get the fucking shit. I mean, oh my god, they're fucking dropping it. Now they're tanking it pre-market. What the hell was that? The shit just went. I swear to God, I just watched the stock go down 3% and then 1% green. I'm telling you guys, something crazy is gonna happen when the market opens. Maybe when Noto starts talking right now. God damn it! Fucking that music fucking ruins the whole stream. Yeah, I'm gonna. It hasn't started yet. It hasn't started yet. It's not started yet. It's supposed to start at 8. It hasn't started yet. I just checked. EPS was 1 cent. They were looking for 0. But it doesn't matter because fucking Q3 they're jumping up to 4 cents. Q4 is going to or Q3 is going to 4 cents. I think Q3 4 cents. I think Q4 is going to like 6, 7 cents. It's not hasn't started yet, guys. I'm listening to the call. I listened to it. It's not started yet. Not yet. They're playing games, yo. I'm telling you, they're playing games in the pre-market right now. Crazy games. Crazy games. I got the call, guys. Don't worry. I got the call when it starts. So it hasn't started yet. I'm broadcasting the call, man. That's the whole thumbnail. The earnings call. It hasn't started yet. They run late a little bit. Sometimes they run a little late. Sometimes they run a little late. Yeah, what was that? I gotta check that. What is the SBC? Let me go check that out. I can find it. Stock-based compensation. Stock-based compensation. Where are you at? Here we go. Here we go. Here we go. Stock-based compensation wasn't that bad. It was only $61 million. Wasn't bad. Yeah, it wasn't bad. Yeah, guys, they're running behind. They're running behind on the call. They're running behind. I just checked it. It's just music. They're running behind. 3 minutes late. They are 3 minutes late. 3 minutes late. It's not on now. I have the call live. It starts at 8. It's just how did it start? I have it right here. Okay, I got it. We here?
Profitability returns. Second, our continuous product innovation and brand building are fueling significant member and product growth, which are key to our long-term revenue and profit growth outlooks. Third, turning to our segment results, our financial services segment demonstrates our clear structural advantages in delivering value to members. Fourth, our leadership and agility in lending has generated sustained returns despite rising rates and positions us to move quickly once rates come down. And finally, our tech platform is making good progress on its journey toward becoming the AWS of not only fintech, but of financial services broadly. Turning to the first topic, the success of our one-stop shop strategy. For Q2, adjusted net revenue reached a new record of $597 million, a 22% year-over-year increase. Our rapid diversification made a record revenue quarter possible, even with just 5% growth in adjusted net revenue in lending. Combined, financial services and tech platform revenue grew 46% year-over-year and now makes up 45% of total adjusted net revenue, up from 38% 1 year ago. To put that accomplishment in context, lending now stands at just 57% of adjusted net revenue, compared to 99% of our revenue when I joined nearly 7 years ago, and more than 70% of revenue just 2 years ago. We also delivered even greater growth and profitability in the quarter. EBITDA grew 80% year over year to $138 million. We recorded our third consecutive quarter of GAAP profitability with $17 million in GAAP net income versus a loss of $40 million in Q2 of 2023. Credit performance was better than expected as cumulative fair value adjustments from delinquent loans peaked in March, along with delinquencies on an absolute and percentage basis. We are really encouraged by our team's ability to bend the curves through stringent underwriting, limiting credit exposure when prudent, and improving collections and servicing. Chris will share details on the performance of our recent personal loan vintages, which show clear improvements versus older vintages, underscoring our confidence in our prior guidance around life of loan losses peaking in the 7 to 8% range. Our loan sales continue to scale at attractive execution levels with an increasingly diversified set of buyers, with $1.6 billion in total sales this quarter and $4.7 billion in the 3 trailing quarters. This brings me to my second topic. Our rapid pace of innovation and brand building are fueling significant member and product growth. The growing size of our member base and the number of products they use impact the results we're reporting today. But more importantly, they are the leading indicators of our potential revenue growth and profitability in the future. In Q2, we added 643,000 members and now have 8.8 million in total. That's up 41% year over year. We grew products in the quarter by 946,000 to 12.8 million in total. That's up 43% year over year, adjusting for our exit from crypto last year. Nearly 40% of all new products in Q2 were opened by existing Sofi members. We also see that nearly 30% of new members open a second product in the first 30 days, demonstrating the immediate value of our one-stop shop strategy. We've doubled our member base and number of products in the past 2 years, and Q2 was the 20th consecutive quarter of greater than 30% growth. Our growth in members and products will drive our financial growth for years to come, and is the basis for our 3-year financial outlook shared at the end of 2023. All this growth is a direct result of our relentless focus on innovation. Because we offer products across 8 categories, compared to many fintechs that only offer 1 or 2, the magnitude of our innovation is not always obvious. As much as I'd love to share the full breadth of what we shipped in the quarter, I'll just cover a few of the highlights. I'll start with our financial services business, which drove 91% of our new product adds in the quarter. Our Invest offering is getting better every day. In fact, I don't know of any other self-directed product that offers alternative assets like private credit, private real estate, and private venture investing side by side with fractional shares, robo-funds, ETFs, and IPOs. Our innovations over the last year are starting to accelerate results, driving a 58% year-over-year increase in assets under management in our Invest business in Q2. And this was driven largely by net flows. We fully rolled out alternative assets and mutual funds, including interval funds from well-known financial leaders in KKR, Carlyle, Franklin Templeton, and ARK Venture Fund, which includes several leading private technology companies. Alternative assets generated 12% of all net flows during the second quarter. We brought the concept of one-click checkout to individual asset transfers, enabling our members to consolidate their assets the way they would like. And now we're seeing benefits from that innovation as well. We are now finalizing a turnkey way for companies going public to extend participation in their IPOs at scale to their customers, employees, and partners. With this new directed share program, people can open an account, enter an order, and fund it in minutes without fees, minimum balances, or speaking to anyone in order to participate in an IPO. Turning to Sofi Money, in the quarter, we launched Zelle, one of our most requested features and one element of our much larger money movement product pipeline. The innovations in our member business unit, which focuses on ensuring our products work better when used together, are reaching critical mass. For example, 3 million members have signed up for Sofi's broad-based rewards program. We're creating a rewards economy across our products, including rewards for using our app and other services, and we're expanding redemption options, including into stocks, cash for savings, and travel. For Sofi Plus, we achieved 1 million members. For people that are not familiar with SoFi Plus, it is our premium membership tier available to those who enable direct deposit. SoFi Plus includes our highest APY on banking balances, which today is up to 4.6%. It also includes up to 2x reward points, up to 3.3% cashback rewards on SoFi credit spending, discounts on personal loan rates, and much more. And I'm very excited to share that we've laid the foundation to provide more value in SoFi Plus, not only to direct deposit members, but also a monthly paid subscription product for those who prefer that option over direct deposit. We intend to test this new subscription-based option for SoFi Plus later this year. We're also driving iteration and learning to drive innovation in credit cards. We improved our acquisition capabilities and introduced a 10% cashback boost for SoFi Plus members that has shown positive results. And I'm excited to share that this week we'll also begin testing 2 new credit cards to better serve our members' needs. One card for cashback rewards on everyday high spending categories, and one for members who need a no frills card with no surprise fees. Turning to lending, we've launched new capabilities that position us for future growth, especially as the rate environment improves. In small and medium business, members can now apply for a loan at SoFi and get approved offers from lending partners. In home loans, we can now close our home equity products instead of brokering them out. This dramatically increases our potential for revenue per loan. Notably, we're now a principal in home equity loans and can offer members a lower cost of borrowing in these secured loans compared to higher rates in unsecured lending. And of course, our tech platform is a center of innovation as we add capabilities to our already comprehensive offering. We expanded our buy now, pay later product for post-purchase use. We added new wire capabilities and extended the AI-driven transactional fraud capabilities in our payment risk platform to non-processing partners. We also advanced the quality of our managed service in the cloud and introduced 3DS, which adds another layer of security to digital card transactions. These improvements ensure our modern, cloud-based platform will continue to serve the needs of brands, fintechs, and global financial institutions alike. Having world-class products is a necessary factor in becoming a top 10 financial institution, but it's not enough. We must also become a trusted household brand name. We measure this by our unaided brand awareness. Our world-class marketing team stands in a category of 1. Their amazing work has increased unaided brand awareness to the 7 to 9% range, which is up about 40% year over year and 4x since 2021. Our brand punches way above its weight as our team continues to make its footprint bigger than its foot. Now diving into our segment results. In financial services segment, we are seeing the continued benefits of structural advantages that drive our leading value proposition. We reported record segment revenue of $176 million, up 80% from $98 million in the year-ago quarter. Importantly, this drove contribution profit of $55 million compared to a loss of $4 million 1 year earlier. Financial services products grew $865,000 in the quarter, up 48% year over year, adjusting for our exit from crypto last year. Revenue per product grew 8% quarter over quarter and 29% year over year. We believe there's substantial upside to the monetization of our financial services products. SoFi Money achieved new records this quarter as ending deposits totaled $23 billion, with consumer deposits up $2.2 billion from the previous quarter. Account openings grew by 419,000, and 90% of our deposits remain tied to sticky direct deposit relationships. Debit spend also continues to increase at a rapid pace, up 129% year over year, and now annualizing at about $9 billion. Our credit card and invest businesses remain in investment mode with nearly $100 million in annualized losses, but we expect them to follow a similar path to Money in achieving variable profit and contribution profit. In our credit card business, delinquency entry rates and roll rates improved by roughly 20% apiece from 2023 averages. Turning now to my fourth topic, our strong leadership across lending. We reported strong results despite our conservative posture, given a 500 basis point increase in benchmark rates over the past 2 years and continued macro uncertainty. Importantly, net interest income reached an all-time high of $279 million, or 82% of lending revenue versus 72% 1 year ago and 45% 2 years ago. Net interest income is cash revenue. Let me say that again. Net interest income is cash revenue, so 82% of our lending revenue is cash. Notably, discount rates and spreads were largely unchanged and in aggregate had a slight negative impact on lending revenue. Our personal loan originations reached a record of $4.2 billion while sticking to stringent underwriting standards as our team demonstrated its grit by consistently iterating on pricing and marketing throughout the quarter. Our home loan originations were their highest since Q1 of 2022, growing 24% quarter over quarter and 71% year over year, despite interest rates at their highest level in 10 quarters. On top of that, purchase home loan volume was our highest ever, growing 25% from Q1 2024 and nearly 100% year over year. Once rates come down, we expect to benefit from our expansion into 3 products in home lending: purchase loans, home equity loans, and the volume already generated by our financing business. Student loan originations grew 86% year over year. The team drove our strongest Q2 of origination volume in 3 years by iterating to drive continuous improvement throughout the quarter and into Q3 with private loan refinancing, which exemplifies our ability to respond to environmental factors to drive results. And my 5th topic, the tech platform segment is making good progress on its journey to become not only the AWS of fintech, but of financial services more broadly. We recorded segment revenue of $95 million, up 9% year over year, and contribution profit of $31 million, up 82% year over year at a 33% margin. This represents our 4th consecutive quarter of over 30% margin. Our customer wins have been more diverse, including but not limited to secure card and B2B partners. Our pipeline of interest remains robust and includes U.S. and international financial institutions, along with major consumer and commercial brands. As we have noted, we are pursuing enterprise partnerships with larger existing customer bases for more durable revenue opportunities. These partnerships take multiple quarters, not months, to win, and have even longer integration cycles due to their size and complexity. In closing, the quarter was exceptional. We continue to demonstrate a record of strong, diversified growth, even in uncertain times. The performance of our leaders and the grittiness of our team was the best I've seen in my 7 years here. Suffice it to say, I cannot wait to see what we achieve in a better climate. Combining our high member growth and product innovation with lower benchmark rates, unemployment at 4 to 5%, stable inflation, and a stable economy, I could not be more confident in our ability to achieve our ambitions. With that, I'll turn it over to Chris for a deeper look at the results.
Thanks, Anthony. The second quarter was underscored by continued execution, profitability, and increased diversification. Strong evidence of how our differentiated business model drives Sofi's durability and long-term growth potential.
Do it, man.
I'm going to walk through key financial highlights and our financial outlook. Unless otherwise stated, I'll be referring to adjusted results for the second quarter of 2024 versus second quarter of 2023. Our GAAP consolidated income statement and all reconciliations can be found in today's earnings release and the subsequent 10-Q filing, which will be made available next month. For the quarter, we delivered record adjusted net revenue of $597 million, which grew 22% year over year. Adjusted EBITDA was $138 million at a 23% margin. This represented over 7 points of year-over-year margin improvement, demonstrating significant operating leverage. In fact, sales and marketing declined as a percentage of adjusted net revenue by 6 points relative to the year-ago quarter. We delivered our third quarter of GAAP profitability, with GAAP net income reaching $17.4 million, a $65 million improvement year over year, and GAAP EPS of 1 cent per share. Now on to the segment level performance. In lending, we achieved adjusted net revenue of $339 million, with $198 million of contribution profit at a 58% margin. These results were driven by 20% year-over-year growth in net interest income, while non-interest income was down 38% as planned. Growth in net interest income was driven by a 40% year-over-year increase in average interest earning assets and a 27 basis point year-over-year increase in average yields. This resulted in an average net interest margin of 5.83% for the quarter, up 9 basis points year-over-year. In terms of non-interest income, Q2 originations grew 22% year-over-year to $5.3 billion and were driven by a record quarter in personal loan originations, which grew 12% year-over-year and 28% sequentially to $4.2 billion. Our student loans business saw origination volume grow 86% year-over-year, with a slight 2% decline sequentially to $737 million. Home loans grew by 71% year-over-year and 24% sequentially to $417 million. Our personal loan borrowers' weighted average income is $168,000, with a weighted average FICO score of 747. Our student loan borrowers' weighted average income is $137,000, with a weighted average FICO score of 764. In the second quarter, we sold portions of our personal loan and home loan portfolios totaling nearly $1.6 billion. In terms of the personal loan sales, we closed $1.1 billion of principal at a blended execution of 106.2%. These sales had similar structures to other recent personal loan sales, with cash proceeds in line with par or at a small premium to par, with the majority of the execution premium consisting of a contractual servicing fee that is capitalized. These deals included a small loss share provision that is above our base assumption of losses and immaterial relative to the exposure we would otherwise have if we held the loans. Our $381 million of home loan sales were sold at a blended execution of 101.9%. Additionally, we sold $69 million of late-stage delinquent personal loans in the quarter. We noted last quarter that we typically have not sold delinquent loans until such time that they are charged off. However, we've been able to generate positive incremental value in these sales relative to selling after they charge off, both from our improved recovery capabilities and by maintaining servicing. Finally, we executed $989 million of senior secured financing, which will show up on our detailed balance sheet as senior secured loans held for investment at amortized cost. These loans have a fixed term structure and are secured against the underlying assets, therefore equivalent to investment grade bonds if you were to do a securitization for the same pool of collateral. In addition, these loans are priced at market rates, which not only helps to diversify our balance sheet, but also provides an additional return above our cost of funding and a yield similar to the net interest margin of our loans, which are unsecured. Turning to credit performance, our on-balance sheet 90-day personal loan delinquency rate was 64 basis points in the quarter, a decrease from 72 basis points in Q1, which is evidence of surpassing a peak. Our personal loan annualized charge-off rate increased to 3.84% from 3.45% in Q1 2024, including the impact of asset sales, new originations, and the delinquency sale in the quarter. Had we not sold these late-stage delinquencies, we estimate that including recoveries between 90 and 120 days delinquent, we would have had an all-in annualized net charge-off for personal loans of approximately 5.4%. For our student loans, our on-balance sheet 90-day delinquency rate was 12 basis points versus 13 basis points last quarter, while our annualized loan charge-off rate was 64 basis points. That brings me to an important point, an in-depth look at cumulative net losses on several of our personal loan vintages and how this underscores comfort in our 7 to 8% maximum life of loan loss assumptions in line with our underwriting tolerance. As you can see on page 8 of our investor presentation, a loan vintage analysis indicates the following. Using our 2017 vintage as a starting point, as this is the last that approached 8% life of loan losses at 7.85%, you can see significant improvement in cumulative net losses at a given percentage of remaining unpaid principal for more recent 2022 and 2023 vintages. Specifically looking at the Q4 2022 vintage, soon after we made material cuts to credit, at roughly 40% of remaining unpaid principal, net cumulative losses of 5.02% are well below the 6.07% observed in the 2017 vintage at that same point of 40% remaining principal balance. In addition, you can see that more recent vintages are performing as well or better than the Q4 2022 loans at similar levels of remaining unpaid principal. This is critically important as this analysis and comparison gives us confidence that our loans will continue to perform in line to better than our tolerance. Furthermore, looking at page 9 in the investor presentation, you will notice that only 44% of unpaid principal remains from our Q1 2020 through Q1 2024 originations. Among the 56% of principal that has already been paid down, we've seen only 3% in net cumulative losses. For life of loan losses on this entire cohort of loans to reach 8% net cumulative losses, the remaining unpaid principal would need to charge off at a rate of 11%. Past vintages have performed meaningfully better after this point in the seasoning curve, further improving our confidence in achieving loss rates below 8%. Now turning to our fair value marks and key assumptions. Our personal loans are marked at 104.3%, 5 basis points higher quarter over quarter, with a negligible change in the discount rate. For our student loan portfolio, the fair value mark decreased by 17 basis points to 103.6%, while the discount rate rose by 10 basis points to 4.44% due to rising rates and a wider spread. Overall, sequential changes in spreads and discount rates had a negative impact on reported revenue. Moving on to financial services, where net revenue of $176 million increased 80% year over year, with new all-time high revenue for Sofi Money and our loan platform business, as well as continued contributions from Sofi Invest and credit cards. Overall monetization continues to improve, with annualized revenue per product of $64, up nearly 29% year over year versus $50 in Q2 2023. This is driven by higher deposits and member spending levels in Sofi Money, greater assets under management and monetizable features in Sofi Invest, and robust growth within Sofi credit card spend. Net interest income of $139 million increased 87% year over year, which was primarily driven by growth in consumer deposits. Importantly, non-interest income grew 58% to $37 million in the quarter, which represents approximately $150 million in annualized revenue. This was driven by interchange growth of 67% year over year as a result of over $10 billion in total annualized spend, as well as our referrals from our loan platform business, which grew 66% versus the prior year period. Contribution profit reached $55 million at a 31% margin for the quarter, even as we continue to invest in innovation and new opportunities to rapidly grow this operating segment with attractive returns. Lastly, we reached 11 million financial services products in the quarter, which is up 39% year over year, with 865,000 new products in the quarter. We reached nearly 4.3 million products in Sofi Money, 2.3 million in Sofi Invest, and 3.9 million in Relay. Shifting to our tech platform segment, where we delivered net revenue of $95 million in the quarter, up 9% year over year and 1% sequentially. Revenue growth was driven by strong performance from new clients onboarded over the last 4 quarters, along with strong monetization of existing clients on our platform. Galileo accounts grew 23% year over year to 158 million. The segment delivered a contribution profit of $31 million, representing a 33% margin. We continue to leverage investments made in the segment as we continue to position tech platform for higher rates of diversified, durable growth going forward. As mentioned earlier, a strong pipeline of interest spans financial institutions, along with major consumer and commercial brands, representing larger and more durable revenue opportunities, and with longer sales and integration cycles due to the size and complexity. Shifting to our balance sheet, where we remain very well capitalized. Assets grew by $1.3 billion as a result of $2.1 billion of growth in loans and approximately $800 million decrease in cash, cash equivalents, and investment securities. On the liability side, member deposits grew by $2.2 billion to $21 billion, while overall deposits increased to $23 billion. We also reduced our brokered deposits by $800 million as we continue to use our consumer deposits to replace higher cost parts of the funding stack and we exited the quarter with $1.1 billion of warehouse debt drawn. Currently, there's a 213 basis point difference between the interest we pay on deposits and the interest we pay on warehouse lines, which translates to about $500 million in annualized interest expense savings, given the size of our deposit base. This difference also continues to support our net interest margin, underscoring the benefits of having the option of holding loans on balance sheet when advantageous and collecting net interest income. Overall, we expect to maintain a healthy net interest margin above 5% for the foreseeable future and benefit from the continued mix toward deposit funding, along with our ability to sustain healthy deposit versus lending betas. In terms of our regulatory capital ratios, our total capital ratio of 16.8% decreased by approximately 50 basis points from 17.3% last quarter and remains comfortably above the regulatory minimum of 10.5%. Lastly, we grew book value to $5.9 billion and tangible book value by $92 million sequentially to $4.2 billion, with tangible book value per share at $3.92. Now on to guidance. Throughout the last 12 months, we have demonstrated the benefit of having a diversified, high-growth set of revenue streams, multiple cost-efficient sources of capital, a keen focus on underwriting high-quality credit, and a high degree of operating leverage as we scale the business. We expect those benefits to persist, even in light of the macro backdrop. For Q3, we expect to deliver adjusted net revenue of $625 to $645 million, adjusted EBITDA of $160 to $165 million, GAAP net income of $40 to $45 million, and EPS of 4 cents per share. For the full year 2024, we now expect to deliver adjusted net revenue of $2.425 to $2.465 billion, which is $35 million higher than our prior guidance range of $2.39 to $2.43 billion. This implies 17 to 19% annual growth versus 15 to 17% previously. This guidance now assumes lending revenue will be at least 95% of 2023 levels, financial services will grow more than 80% year over year, and tech platform will grow mid to upper teens % year over year. While this is lower than our original 20% guidance for tech platform, we view this as transitory and still feel confident in our multi-year growth guidance for this business. We now expect to deliver adjusted EBITDA of $605 to $615 million, above our prior guidance of $590 to $600 million. This represents a 25% adjusted EBITDA margin. We now expect full-year GAAP net income of $175 to $185 million, above prior guidance of $165 to $175 million, and GAAP EPS of 9 to 10 cents per share, above prior guidance of 8 to 9 cents per share. We continue to expect growth in tangible book value of approximately $800 million to $1 billion and continue to expect to end the year with a total capital ratio north of 16%. We continue to expect to add at least 2.3 million new members in 2024, which represents 30% growth. Overall, we couldn't be more proud of our Q2 results. Having delivered $597 million of adjusted net revenue and $138 million of adjusted EBITDA, we continue to make great progress against our long-term growth objectives and remain very well capitalized to continue to pursue our ultimate goal of making SoFi a top financial institution. With that, let's begin the Q&A.
At this time, I would like to remind everyone that in order to ask a question, please press star followed by the number 1 on your telephone keypad. Please keep in mind we'll take only one question per person at a time. Please rejoin the queue for any additional questions. And the first question comes from John Hecht from Jefferies. John, your line is open. Please go ahead.
Morning, guys, and thanks for taking my questions, and appreciate all the incremental disclosure in the deck. The question is, I think you said that cumulative losses would have to, go above 10%, I think to 11%, for you to kind of breach your 8%, assumptions in your underwriting. What kind of scenario would that entail, in terms of like payment rates or delinquency rates? and just to kind of connect the dots there.
Yeah, sure, John. Thanks for the question. So like we said, credit's performing in line with expectations, and we remain extremely confident in our 7 to 8% life of loan loss assumption. Just to reiterate what I had mentioned in my prepared remarks, when looking at all originations from 2020 through Q1 of 2024, only 44% of those remain. Of the 56% that got paid down, we've experienced only 3% net cumulative losses. So in order to reach 8% cumulative losses on the entire pool, the remaining 44% would need to charge off at 11%. So from where I sit, something would have to materially change in order to hit 8%, as prior vintages with similar levels of remaining UPB have never experienced losses even close to 11%. In addition to that, we ended up showing you vintage analyses that highlight how recent vintages, since making our credit cuts back in the second half of 2022, are performing materially better than the 2017 cohort, which was the last one to come even close to 8%. Furthermore, what gives us even more confidence is that the leading indicator for losses, which are our delinquencies, have started to turn the corner, and we're really bending the curve. So in our personal loans business, we ended up surpassing a peak in Q1 on not only dollar principal, but also cumulative fair value adjustments and percentage UPB. So from a dollar principal perspective, we ended up having $96 million of 90 to 120 day delinquencies in the quarter versus 103 back in Q1. From a percentage UPB basis, those were at 64 basis points in the quarter versus 72 basis points in Q1. And then from a cumulative fair value adjustment basis, that was $79 million in Q2 versus $88 million in Q1. And what's even more important than that, these trends are continuing throughout the first several weeks of Q3.
Dude, Bears are done with
The next question comes from Terry Ma from Barclays. Terry, your line is open. Please go ahead.
Bears are done.
Hi, thank you. Good morning. So you show some pretty encouraging vintage charge-off metrics in slides 8 and 9, and it sounds like from your commentary, everything's kind of in line. But maybe just kind of reconcile your more conservative stance and maybe talk about what you need to see in the environment to maybe just grow a little bit again in the portfolio.
Thank you for the question. We're really encouraged by the trends we're seeing in credit, as Chris mentioned. We're really proud of the fact that we're able to achieve record revenue with 22% year-over-year growth, with lending barely growing. I would say the areas of incremental opportunity as we go into the back half of the year: home loans, really proud to see the growth rate year-over-year in home loans. Student loan refinancing, also a product that shouldn't be doing really well in this interest rate environment, also had strong growth. On the personal loan side, we're going to stay relatively conservative compared to our balance sheet ending assets there, primarily because we want to see how the year trends in terms of unemployment. There's a big number coming out on Friday. We're at 4.1%. A move to 4.2% could signal a recession. And so while there have been improvements, we're not changing our stance. We're able to achieve pretty strong growth year-over-year without getting too aggressive on the personal loan side. There are factors that could cause us to originate a lot more in personal loans. I will tell you, I see more near-term opportunity in home loans and student loan refinancing. But in personal loans, the thing that would cause us to be more aggressive in terms of the growth rate is if we have greater than expected sales. In addition to that, changes in benchmark rates. In addition to that, continued improvement in our credit trends if they start to accelerate better than we've already seen, which is quite positive. But all in all, we have a lot more growth. We could grow much faster if we wanted to, but we want to drive durable, diversified growth. And that was the reason why we took a stance in limiting our personal loan balances specifically. The other thing that could drive growth, which would be further diversification of the balance sheet, is home equity loans. We're now doing home equity loans as a principal as opposed to an agent. They're obviously secured lending and attractive rates, more attractive than personal loan rates. So there'll be a great emphasis on that. That could also drive better performance there. So a lot of opportunities as it relates to the lending business. We're taking a pretty conservative view purposely. I quite frankly don't feel like we're getting paid for the results we're delivering, so I'm not sure why we'd be overly aggressive at this point.
The next question is from Dan Dolev at Mizuho. Dan, please go ahead. Your line is open.
Hey guys, great results here. Really appreciate letting us asking a question. So, how are you, Anthony, Chris, like, how do you expect to keep growing financial services? I mean, obviously you've grown deposits so much. How do you expect to grow it given that you've grown interest income now? Like, if you can talk a little bit about the near-term future. Thank you.
Thanks, Dan. Well, first, we did a really incredible job driving the diversification. The only way we're able to achieve record revenue is because our financial services segment had a record at $176 million, up 80% year over year. It was driven by product growth, as you know, up 47%. It was also driven by deposits, up 80%. That drives the net interest income. I think more interestingly is the growth opportunity we have in non-net interest income. We reported $37 million in that line item. It grew very nicely, 58% year over year. If you annualize the number, it's about $150 million. And there's a couple of drivers of that. First, continue to drive increased product growth. We had 47% growth in financial services products. That will be one driver of strong growth. The second is increased monetization or revenue per product. We saw strong growth in revenue per product in the mid-20s as well. What drives it going forward from here? Interchange was up 67% year over year. AUM was up 58% year over year. We'll see benefits in brokerage, not just from AUM growth, but also increased monetization per dollar of AUM, which is about half what we think the benchmark rate is. Continue driving home, auto, and life insurance, which we call Sofi Protect, and then our loan platform business. So it's a combination of those different monetization vehicles that will drive continued revenue per product, which we think has a significant upside after growing 29% already in this quarter. And then our product growth is something that's probably a lot more visible to everyone, which is up 47%. So dual-pronged growth dual-pronged dimensions of growth should continue to drive increased diversification there.
Oh, man, I fucking killed it, man.
The next question comes from Kyle Peterson from Needham & Company. Kyle, your line is open. Please go ahead.
Great. Thanks, guys. Good morning. Thanks for taking the questions. Wanted to touch on deposits. Obviously, continue to see nice growth in the core base here with members. But how should we think about the growth outlook for deposits and kind of how that counterbalances with any ongoing runoff of some of the brokered funding?
Yeah, I'll let Chris talk about the sort of specific trends in the quarter. But as it relates to the broader macro picture, we're obviously entering an environment where rates are likely to go down in the future. And many people ask us, will you maintain a high rate? And the answer is we will maintain a high rate relative to our competition. We think we have a competitive advantage, given that we have such a big origination platform. The origination platform allows us to fund a higher APY than a lot of other competitors that don't have an origination platform. So the two businesses work in tandem. As rates go down, the value of our loans generally go up, all else equal. And so we can maintain a superior APY. That doesn't mean we may not change it. It just means it will be superior to drive our differentiated value proposition and leverage our competitive advantage. As it relates to deposits, more specifically, rate is one element of our differentiation. The other elements of differentiation start with no fees. We do not charge. We don't require minimum balances to get our services. You do get a higher APY if you do direct deposit, or you do a average monthly deposit of a certain amount. As we mentioned in the call, we'll actually launch SoFi Plus, which will give you that higher rate for a fee per month, which will be quite attractive relative to the amount of interest you could gain when you pay that fee. In addition to that, we have the ability to do person-to-person payments to an email address or a phone number. We recently launched Zelle, which is very unique among the fintechs, which is a highly requested product. In addition to that, we provide seamless capabilities into our brokerage business and money movement more broadly. So the APY is one important element of driving deposits, but it's the broader value proposition that we offer that we think will continue to allow us to drive strong deposit growth on the back of strong member growth in money.
Yeah, and what I would add to that is we've consistently said that we are going to add over $2 billion of member deposits each quarter. We certainly did that in Q1. We did it again in Q2 with $2.2 billion of net new deposits from a member perspective. We did pay down about $800 million of brokered CDs as they had higher costs relative to our member deposits. Right now, we are about just north of 80% deposit funded. Going forward, we believe the optimal mix is consistent with our prior guidance at about 80 to 90%. We still have about $1.1 billion of warehouse debt that's outstanding and nearly $2 billion of brokered deposits. So we're going to continue to optimize funding sources and lower our overall costs.
The next question comes from Reggie Smith from JP Morgan. Reggie, please go ahead. Your line is open.
Hey, good morning, and thanks for taking the question. I appreciate the disclosure on the loss curves, and I hope you guys continue to publish that. Kind of similar thing, I was curious, and I think I asked about this last quarter, about the credit card program or business. And I look at, the fact that you've got 4 million money users and almost 4 million relay users, and only less than 300,000 credit card accounts, and it would seem that there's an opportunity to really be very targeted and slice and find really prime credits within your customer base. Can you talk a little bit about that? Maybe am I oversimplifying that? It just seems like that business could be a lot bigger than it is, but maybe I just don't understand how that ramps up. So maybe a little color on how that business grows and some of the things to keep it from growing faster than it would appear you have the opportunity to grow.
Reggie, thank you for the question on credit card. I would start by saying, we have a pretty diversified portfolio of products. Our goal is to drive a series of S curves of growth across the products so that we drive strong, durable, diversified compounding growth for years, which means we'll invest in some businesses faster and quicker than others. I often say internally, we have some startup businesses, we have some Series A businesses, some late stage growth businesses, and some mature growth businesses. Credit card is one of those early stage businesses where we want to make sure that we get the marketing, the product market fit correct, the credit correct, and really the overall unit economics of our credit card on a per account basis correct. We spent the last 18 months working our butt on that, and we feel like we have the right formula. I know we have the right team. We did change the team about a year and a half ago, bringing in someone that's actually built this business from scratch before, in addition to running businesses. So we have a very positive long-term outlook for credit card and want to contribute to our business. I often say businesses like credit card and brokerage by themselves someday could be bigger than SoFi is in total today. There are companies that are very big that are just in the credit card business and just in the brokerage business. And today, those are small for us and we're investing aggressively. We pointed out the fact that the brokerage business and the credit card business combined are annualizing a loss of $100 million. So what are the changes we're making in credit cards specifically? We'll launch 2 new cards. We'll be testing them slowly. One is an everyday card where people get a much higher percentage reward on categories like food or things that are used every day. The second card is more of a no frills, no surprises card for people that are in our ecosystem that are members, but they have thin credit files, not because they have low credit, they just have very little credit because they may be a new professional, in addition to our existing card. Not only will we launch 2 more cards, but we'll make those cards work better with our other products. So if you're a SoFi Plus member, your rewards will be boosted because of that relationship between SoFi Plus and credit card. So we can start to benefit from not just targeting our members, but giving our members more value for using more than one product, and you'll see us continue to do that over time. But in credit card today, we're going to continue to move relatively slowly and not step on the gas too hard, because this is a business you can lose a lot of money and you can lose it every day. It's unlike a loan where you give somebody a fixed amount. In credit card, you have lines that are quite big and they can be utilized in nefarious ways and drive really high losses. So we'll continue to make sure we approach this prudently, but we are stepping on the gas a little bit more than we have in the past.
The next question comes from Jeff Adelson from Morgan Stanley. Jeff, your line is open. Please go ahead.
Hey guys, thanks for taking my questions this morning. I just wanted to circle back on the lending growth. I know you're still sort of maintaining a more cautious stance on origination there. You did a little bit better than we thought on originations this quarter, and your lending revenue growth looks like it's still up 5% year over year. So I guess just, are you seeing better opportunities coming in the door, and does it have anything maybe to do with more certainty around the forward look with rate cuts? I know you're talking about potential increase in unemployment rate from here as well. So just trying to square all of that. And then Chris, also just in terms of, the bending of the curve comments on credit, just wondering when you think that might translate into the, all in 5.4% charge-off rate starting to come in lower each quarter as well. Thanks, guys.
Some upgrade.
So in the lending business overall, our first objective is to make sure we continue to diversify the lending business relative to the total company. Less capital, less risky businesses get valued much higher. And we don't want to have an over dependence on a high capital, high risk business. And this year, the macroeconomic environment accelerated our diversification, and it's worked out quite well. We also want to diversify within lending. As I mentioned, home equity loans is diversification into secured lending, which will be our second secured product. In addition to that, student loan refinancing is our oldest and used to be biggest product. We think is starting to come into a period where it can do quite well. And that's also diversification relative to unsecured personal loans. And then across home loan refinancing is also a vehicle. As we go through the year, I think it's important just to understand we're trying to manage to the overall growth of the company. We have so much resources we want to allocate, and we're allocating it to drive that outcome of diversified, less risky, less capital intensive businesses. If we wanted to grow personal loans more, we would have to allocate more capital to it. Why? We have to drive marketing that drives the top of the funnel that then drives conversion. Those loans don't just happen because we decide to actually underwrite more. We actually have to spend money to underwrite more. Right now, we're choosing to spend that money in different areas that don't drive as much revenue. But despite that trade-off, we're still driving 22% year-over-year revenue growth and a record despite barely growing personal loans. So it's a very conscious effort to diversify in a number of different ways. Diversification means you reallocate resources other places. If we reallocated to personal loans, we would not achieve our diversification. Now, what happened in the quarter? Our marketing costs were more efficient. The money we were spending was driving more demand than otherwise would have demanded or otherwise would have driven, and we took advantage of the higher unit economics to drive more volume against a set amount of resources in that area. We could be more aggressive if we choose to allocate more resources to lending. That could happen because we have upside in other businesses. That could happen because the marketing efficiency is greater than we anticipated, or the credit is performing better, or we sell more loans. And so it's not because the growth isn't there, it's how we're choosing to allocate the capital in this environment relative to our broader goals. And I'll let Chris talk about the specific question you had on the losses.
Yeah, and in terms of when some of these early DQ trends will start to show up in the NCOs, we're sticking with our overall guidance of being confident in the 7 to 8% life of loan losses, and we aren't guiding to NCO rates specifically. Reason for that is quite simple. The NCO rate is very lumpy. It's a function of a number of different factors, such as originations in the period, sales in the period, and most importantly, the average age or how much UPB remains on the portfolio, which can be driven by a number of things. So overall, we feel really confident in our life of loan loss expectation of 7 to 8%, but we're not guiding to NCOs because they're so lumpy.
Final test question today comes from Peter Christensen from Citigroup. Peter, your line is open. Please go ahead.
Citi.
Thank you. Thanks for the question here. Good morning. Nice trends. I was wondering if you could talk about the appetite for future asset sales, either demand for it, but also your risk transfer strategy kind of going forward from here, given that you are seeing improvements, credit improvements in your portfolio, particularly in the personal loan portfolio. Just how are you thinking about risk transfer from here, and if there's further opportunities to de-risk the portfolio? Thank you.
Yep, absolutely. So overall, we're seeing continued strong demand from credit buyers. We've done $3.3 billion in sales over the course of the last 3 quarters in our personal loan business and 4.7 in aggregate. That's predominantly driven by the shape of the interest rate curve with lower expectations in the second half of this year, as well as the next several years. So we have very attractive yielding assets with very strong credit profiles and low risk for buyers. Essentially, buyers are looking into locking purchases and programs ahead of any interest rate cuts. In addition to that, we have a really strong balance sheet. We are able to offer flexible deal structures to meet buyers where they need to be. We are one of the few participants that can sell in size. It allows investors to put money to work. It allows buyers to have one buyer versus many, and it allows them to have a long-term partner versus doing bespoke one-off transactions that require a ton of work. Buyers want stability of asset generation. So looking forward, we expect to see continued strong demand from credit buyers. In a declining rate environment, we would expect that demand only to increase as those buyers would have lower cost of leverage. And again, we're one of the few folks that have a sizable balance sheet who can do that.
We'll take one more question, operator, and then I'll close with comments.
The final question comes from Tim Switzer from Stifel. Tim, your line is open. Please go ahead.
Hey, good morning. Thank you for taking my question. How would a return to a lower rate environment kind of change the ROE math you guys have talked about on choosing to retain loans versus selling? Do you believe it could strengthen demand at all in the secondary market and kind of change your balance sheet management at all?
I would say generally lower rates are going to make the loans more attractive to those without origination platforms that have assets they need to deploy. Our weighted average coupon is quite high, and that ROE becomes more attractive as rate environment declines and there's less places for them to find that type of yield. We've seen that in the past be the case. So we would anticipate more demand. We'd have to manage it relative to our production and our own financial goals. But I do believe the demand would increase and the terms would be more favorable and the values also, would be attractive. We have to wait and see that happen, but that's what we've seen in the past. Great. In closing, I want to express my gratitude to our team. Q2 was the most rewarding quarter and dare I say the most fun that I've had in some time at SoFi. What made it special and fun was that we challenged ourselves to be better in areas that are the most difficult in the current environment that aren't supposed to do well in this environment, such as home loans and student loan refinancing that had volume increases of 71% and 87% year over year. The team found a way to be better continuously throughout the entire quarter, not just each month or each week, but literally each day, finishing strong all the way through the tape when, quite frankly, the only reason was because we pushed ourselves to keep iterating. It was also fun because we made hard resource allocation decisions in 2023 that meant doing less than we wanted to in areas with great growth potential, such as invest and credit card, where we are now seeing promising results. Our invest business is accelerating with AUM up 58% on the back of a lot of hard work and only a couple of important areas and a testament that less can be more. In our credit card business, the immediate gains from all of our iteration aren't so large today, but with time and scale, they will be massive and well worth the patience. If you can't tell by now, I feel great. To put it bluntly, I do not know of any financial services company or fintech that has transformed their business to be less risky, less capital intensive, while still driving strong revenue growth, 40+% user growth, all while massively increasing profitability and still funding a rapid pace of innovation. When you take a step back, it's inspiring to see. We hit record revenue of nearly $600 million with 22% year-over-year growth, despite lending barely growing. We did that because we achieved record revenue in our financial services segment at $176 million, up 80% year-over-year on the back of 47% year-over-year growth in products, 80% year-over-year growth in deposits, 58% year-over-year growth in AUM, and 67% year-over-year growth in interchange. In lending, we grew home loan volume 71% year-over-year, student loan refinancing volume 87% year-over-year, and personal loan volume 12% year-over-year, while delinquencies declined on an absolute and percentage basis for PL, and we provided vintage analysis that clearly shows why we are comfortable with personal loan, life of loan, and loss forecasts. And finally, we grew EBITDA 80% year-over-year. I love what we have built, but more than ever, I love the people we are building it with and the gritty culture we have created. Hard is not for everyone, but for me and those who stay at SoFi, it fits just fine. Thank you for your interest in SoFi and talk to you next quarter.
Holy shit. Yo, he
This
just
concludes today's call. Thank you very much for your attendance. You may now disconnect your line.
yo. Yo, Anthony Noto. Oh my God. Jesus. Oh my God. That was crazy, yo. He just came for the shorts, man. He just came for the shorts. Oh my God. I can't believe that. I can't believe that. We are stuck right here right now though. So guys, this like 764 level has been resistance for like a while, like past couple of days. That 764. You can see the stock's doing pretty good in pre-market. I'll show you some other stocks. So guys, we're listen to this right now. You got Jerome Powell coming up. Look, we're watching 143 growth stocks. Wait for it. 43 are red. And the next 90 are less than 1%. Guys, look at this. SoFi is right here. Top 4 companies today that I'm watching, on the entire watch list. So the earnings are paying off. If we didn't have the earnings today, we'd probably be down 1 to 2%. But I think these earnings are going to be juiced throughout the market because he really came after the bears, going after their life of loan loss on the personal loans. They wanted 7.5 this quarter or whatever it was, and it was not even close, guys. I mean, the dude just destroyed the bear thesis on these like life of loan losses, man. I mean, we're looking freaking good right now. If they drop some bullshit short headline with a downgrade and lie, it's time. Citron. If they want to be like that, the cuffs are coming, man. The cuffs are coming. Because you gotta do a financial duty to be a Wall Street analyst. Now they have no excuses. They literally put the slide on the investor presentation. These are brand new slides specifically for 2 to 3 analysts that want to just keep fucking downgrading our stock to 3, 4, 5, 6. Guys, he put those things there, those presentations for them. What are they going to say now? They're wrong. They're wrong about where these losses were going and stuff. They're saying they're much better than expected. God almighty. What is going on right now, man? Yo, dude, I'm telling you guys, this price action probably has a lot to do with that $20 million or 20 million shares borrowed yesterday. I mean, those could get gobbled up in 2 seconds if someone's trying to short this, because you're going to get upgrades coming out of this world because, I mean, guys, record revenue, second highest member. I mean, Q3 is going to be crazy. I mean, Q3 is going to be printing money. You know how these companies, Coinbase and Robinhood, are printing money with Bitcoin at all-time highs, crypto trading volumes? SoFi is about to be printing money like that with no crypto trading volumes. Legitimate diversified business, guys. What's going to happen when Bitcoin cools off and SoFi just fucking skyrockets past all those companies? They are going to be at the tippy top of all of fintech because they diversified. Not personal loans, mortgages, student loans, HELOCs, trading platform, everything, bro. Guys, we're looking good. We're looking good. Noto, he knew. What did I tell you at the beginning of the call? I told you. I said, Noto, he has no choice. That was no choice. He just dropped hammer after hammer. 80% deposit growth. 80% this year financial services growth. Guys, that's faster than 95% of software as a service companies on the US stock market. That thing is growing like wildfire. 25 million quarter over quarter. I'm telling you right now, this company is going to be printing $100 million profit first year of being profitable in the fourth quarter. They're going to print $100 million. 2 new credit cards in the works right now. I just forgot that. You're going to hear about that. HELOCs will be huge. Record earnings. What did I tell you guys? I told you. I just, the stock was red 1% flat. I was like, man, something's not adding up. Kept reading through the earnings. I was like, man, Galileo still pausing, but they're growing fucking accounts so much. Those accounts might all monetize at the same time. It might be a super whale going on. Who knows? That was the little red flag. It doesn't matter because Q3, they're freaking coming out banging in Q3. I don't know where the money's coming from in Q3, but hey, it's coming somewhere. Guys, SoFi's in the top 6 today, okay? We got to wait for Powell. We need rate cuts. Rate cuts happen Q4, $100 million profit. I'm telling you. You guys can't wait till see a Q4? I mean, what do we got? 5 months left? August, September, October, November. 5 months left in the year, man. We're already 33% done with Q3. These guys are 4 quarters, about to hit 4 quarters in a row profitability. If they get their stock up to like $12 to $14, S&P 500 can be approved at any given moment, depending on what type of hype this stock gets. 1 more quarter of profitability, $14 stock price. S&P 500's on the way. Notice just keeps marching this road, marching this stock right down, or marching the company right down where it needs to be. All right, guys, that's a wrap. I'm going to watch the CNBC interview. We went live for 3 hours. We literally dropped the earnings breakdown of the second. It was crazy, man. It was crazy. So really appreciate the support. Thanks for you guys that are stay tuning in. Noto gave you what you wanted. I mean, there's 20 million shares borrowed as of yesterday. You're going to see more crazy shit happening when the stock market opens, okay? They're doing what they need to do. I mean, what are they going to do? I mean, you can only do so much, okay? You need all the analysts on your side. You need the market to shift. You need rate cuts. Everything, like I said, has to be perfect all at once. We had a lot of perfect things going on, but if you want everything perfect at the exact same time, you need a Powell to come in and drop the rates a little, and Q4 is going to be fucking crazy, okay? So, all right, I really appreciate it. I'm going to watch Noto on CNBC. Thank you for the support. This is a very fun live stream. I wish the best, and have a great day, y'all, okay? Goodbye.